But then, look at that. Then it shows live on the main canvas in the
Yeah, exactly. But it's still YouTube that is controlling the stream. I think we might be live on YouTube. Okay.
Very confusing. Hi, everyone.
Okay, and we're in.
Are we live? Are we live?
Find out. Let me find out. Okay.
Let's find out if we if we have audio on, because last time.
Yeah, we did go for some time before we realized.
Yeah. Quite
nothing live yet.
Problem.
Nothing yet. Are you sure you're live on Insta?
Yeah. I'm live. Yes.
Okay. Yep. Sure enough.
You hear me? Hello, hello.
Yeah.
We are live. Okay.
Yep, you're good to go.
Hi, everyone, and welcome to the Tax Files.
There we go. Ooh, spooky, scary. Tax File. Hi. All right.
All right. Hi, everyone. Welcome.
Welcome,
to
welcome.
The Tax Files.
We're doing the Tax
Hi,
Files.
Christians.
Hi, how are you today?
I am good. How are you?
I am amazing. We're going to continue our Hogan series today.
We will continue our Hogan
Yeah,
series.
yeah.
Our little homage to Justice Hogan.
Justice Hogan. We did find out a bit more information about Justice Hogan today.
Last time, we're like, okay, it's Robert J. Hogan.
That's right.
And we're like, what is J?
Yeah.
And you
I think
told me
I guessed
it
John.
might be John.
Yeah.
And
I
so
just guessed. I mean, I didn't actually know. So that was.
so if you look
bad.
at every single tax court decision, you will see the Honorable Justice Robert J. Hogan.
Yeah.
But if you do an advanced search
Okay.
on the Tax Court of Canada website
Okay.
by justices,
Okay.
it says Robert James Hogan.
Nice. Okay.
So
Justice
it's
James. Robert James Hogan. I stand corrected.
and
I
this is a
stand
piece of trivia that will be in the game
Right,
Hitster Tax Court edition.
That's right. We're going to do the tax court trivia at the end of this series. Yes. So James, Robert James Hogan, not John. But we're going to definitely put John in the multiple choice. So we're going to catch out people who didn't pay any attention. And they will be found. Okay, so the first time, Robert James Hogan, I'm ready. So last time we did Justice Hogan's first two 2009 cases. Yep. We had the employee versus independent contractor case that had no reasoning. It was just a decision.
Right.
And we had the Bernier case that was about Section 161 and interest, so that was kind of a fun thing. And we found the taxpayer won in one of those cases and lost in the other. And then we did the Mahmoud versus the Queen case, 2009, Tax Court 89. And this was the one with the Guyanese community.
And it was like the informal way of transferring money.
Exactly,
and I did a little bit of research on this.
Ah, okay.
And it's an informal way of transferring money, but it's formalized in some communities.
Okay.
To do this way of, you go see someone, you give the money to that someone, and that someone's going to call someone in another country saying, hey, you have to give the same amount of money to someone else. Yeah. And it's based on trust.
Yeah, for sure.
It's based on the community.
Yeah. So like informal banking? Is
informal
that what we're
banking,
looking at?
Yeah.
Okay. And it's to avoid, I assume, Western Union charges and
exactly
transfer charges and currency exchange charges.
And also maybe you would trust someone in your community more than MoneyGram or whatever to transfer the money.
Yeah, yeah. Okay, cool. Okay, so that was our 2009. That was an interesting case, actually. There was a lot of in there. And what are we doing today?
Today we are doing Husky.
Husky? One of my favorite taxpayers.
But not the Husky you think.
Okay.
It's Husky Oil Limited.
Husky Oil, okay.
So this is not about beneficial ownership. It's an old case.
Okay.
Docket says 2006. Appeal was heard in 2008. Okay. And the case was...
Do we know the citation of this? I guess it's a 2009 again?
Yeah, so docket is 2006 421 ITG, and docket number is 2009 TCC 118.
Okay.
So 2009 CCI 118.
There we go.
It's going to be Husky Oil Limited and Her Majesty of the Queen.
All right, let's find out what's going on here.
So, appearances counsel for the appellant was Barry R. Crump and Michel Bourque.
Okay.
And counsel for the respondent was Donald G. Gibson.
Can't say that I recognize those names.
I do not.
Okay.
I'm not even sure what law firm it would be. Usually it's at the very end. I'm quite curious. It is Burnett, Duckworth, and Palmer.
Don't know.
Calgary.
In Calgary. Okay.
So
shout out to Calgary.
Local Calgary.
Shout out to local Calgary.
Shout out to Calgary. What time is it in Calgary? Is it
2 hours behind us? So 1:25.
1:25.
I think so.
Wow.
Yeah.
I wish I could time travel like that all the time.
Yeah. Get your afternoon back.
Yeah.
Yeah. Absolutely.
I should just do it back and forth.
I don't think it works like that. I don't know. It's a little bit of a mystery, so it's a good thing for the tax files to sort that out.
Anyway, it's a good question. For example, if ever you are late in filing your documentation with the tax court, can you just go to Vancouver and file it in Vancouver? Can you? I don't know. Can you?
Good.
It's a good question, you know. If ever you're late, it's like it's 4:60,
right.
75.
Get yourself in a private jet.
Yeah, it's 4:75 p.m. and the registry closes at 5.
4:75.
Can you? You forgot to file it. Like you have a motion, whatever. You forgot to file it.
Yeah.
Can you hypothetically
get to Vancouver? No, because you're going to land at the exact same time as you left. It was like 3 hours difference and 3 hours to get there. No, it's 6 hours to get there.
But could
you can lose time. You can do it in the air.
Like at some point in the air,
it was timely.
Yeah.
Here's to Uchronia.
Well, I do believe there is something in the Interpretation Act saying the time in the law is the time in Ottawa or something like that.
Really?
I think for filing documents, there is something. If you know, I'm not sure, but if you know, please drop a comment down below.
Tell us.
Tell us.
We need to know.
We want to know.
We want to know. We want to know.
Oh, someone says, you definitely can.
Oh. Well, there you go. Good to know.
Good to know.
I'm shocked by that. Like, I'm actually surprised by that. Oh, I know who that is. Thank you, Ronan. Thank you for your input. It's very valuable.
Thank you. I think it's the first time that I say, if you know, put a comment down below. There was actually a comment down below. Like, this is a first.
Oh my goodness, I'm dead. Okay.
Okay, and so let's keep going.
All
with
right,
this,
let's find out what's
Let's
going
find
on.
out what this is about. So why did we choose this case? Is that I just put all the cases by Justice Robert James Hogan in chronological order from the tax court website.
Okay.
And last week, the last case we read was Mahmoud, and the next one was Husky, and we're like, oh, Husky, like the new case from last year in beneficial ownership. So we're like, okay, let's read this one. It's quite lengthy. It's 33 pages. So let's see what this is about. Reasons for judgment from Justice Hogan. Introduction.
All right, here we go.
The appellant and Balaclava Enterprises Limited.
Wow.
Ooh, now I want a baklava.
Balaclava? Yeah. Isn't that like a neck thing?
I'm not sure. I'm just thinking about baklavas right now. A significant shareholder of Mohawk Canada Limited, Mohawk Canada, joined forces to complete a takeover of Mohawk Canada.
Okay.
Balaclava? Or is it Balaclava?
I would call it balaclava, but what do I know? Rohan can tell us. He's in the chat. You got it. Can you like that? Like his chat. You know how to do it. You just go beside and you like. I think if you right click. No, not right click. Okay, so I don't know how to do it on the computer. That's hilarious. No idea. Okay, well we'll figure it out. We don't know how to like something on Instagram while we're streaming. We can't. That's too much for us. We'll sort it out later. Okay.
Okay. To acquire, that's the right place.
Yeah.
Join forces to complete the takeover of Mohawk Canada. Balaclava transferred its interest in Mohawk Canada to a corporation, HB Acquisition Incorporated, HB Acquisition, formed by the appellant and Balaclava to complete the takeover. Balaclava received securities of HB acquisition for its shares of Mohawk Canada and significantly less cash than was offered to the other Mohawk Canada shareholders.
Okay.
Balaclava and the appellant agreed to allow Balaclava to acquire the residual assets defined below of Mohawk Canada through the amalgamation of its subsidiary, Mohawk Lubricants Limited, the owner of the residual assets, Mohawk Lubricants, and a subsidiary of Balaclava. The parties disagree on the impact of the amalgamation.
Okay.
The appellant argues that Mohawk Canada disposed of the shares of Mohawk Lubricants in a tax-free rollover under subsection 87.4 of the Income Tax Act Canada, the Act. The respondent, on the other hand, submits that Mohawk Canada took back shares in the amalgamated entity that were worthless as part of a plan to defer capital gains tax for 25 years. The plan was also followed by Balaclava, which allegedly received worthless shares in HB acquisition. As a result of these mutual promises to accept worthless shares, the respondent argues Mohawk Canada should be taxable on the disposition of the shares of Mohawk Lubricants for one or more of the following reasons. A. Mohawk Canada gifted the value of its shares in Mohawk Lubricants for the benefit of its parent corporation.
Gifted?
HB.
Come on.
Gifted the value. Gifted the value.
Okay. I don't think so. I don't think you can gift value.
Can you?
No.
If you're with a non-related...
Corporate gifts? No, I don't. Okay. So, gifted the value of its shares in Mohawk Lubricants for the benefit of its parent corporation, HB acquisition, and or Mohawk received no, I'm sorry, gifting the value is gift is, I just don't believe there's such a, I don't think that we should allow this kind of nonsense. But anyway, I'm willing to listen to it. I just don't believe it. That's all.
Yeah, but the shares are worthless.
Yeah, but I don't, even if they're worthless, okay, first of all, if they're worthless, then why is it a gift? I don't want your worthless gift. So that's not true. Like, there's something shady going on. Sorry, there's something shady going on when you start telling me that there's gifts of worthless things. Sorry, it's just nonsense.
Right. Well, also, it's not gifted the shares, it's gifted the value
of the shares.
But they are worthless, so basically
I
gifted
I don't
you
know
nothing.
Exactly, I gift you nothing. If they're worthless and it's zero, for the benefit, well, how can there be a benefit if they're worth nothing? I just thought the whole thing seems, I don't even understand this. I don't like it. Yeah, I really don't like this kind of stuff.
But also, as a result of these mutual promises to accept worthless shares, the respondent argues. So this is what the respondent
Yeah, so the Crown is saying Mohawk Canada
happens?
should be taxable on the disposition of the shares for one or more of the following reasons. Okay, so go back up. Let's just try to figure this out. So the appellant is who? Husky Oil. Husky Oil and something called Balaclava, which are both the appellant and somebody a significant shareholder. So it must be Balaclava is a significant shareholder of Mohawk Canada. So we have Mohawk and we have Bala being a significant shareholder.
Yeah. And so they join forces.
Yeah.
So to complete the takeover
of this Mohawk, which one of us, so you're Husky Oil, I'm Balaclava. I already own a significant share, but we want to take the whole thing.
Yeah.
Okay. And so we're going to, together, you and I are going to create HB, what they call it, HB acquisition. So it's called HB.
Yeah.
Okay. HB. We're going to create that. So presumably we each have a share in HB now. And we're going to, Balaclava receives securities of HB for its shares of Mohawk. Okay, so Balaclava is going to contribute its Mohawk shares to HB in exchange for HB stock.
Right.
Fine. And what for shares of Mohawk and significantly less cash than was offered. So and then the other shareholders, the non-Balaclava shareholders, they get cash.
Okay.
But they get more cash. They get cash.
What happens? We did the takeover?
Looks like, well, the first step is putting, that's interesting because it looks like if the shareholders are cashed out, you're already done once Balaclava puts Mohawk
you did the takeover
into HB. Yeah, it seems like it's done. All right, so then let's figure out what's going on here. So Balaclava and the appellant, Husky, so you and I then agree to allow Balaclava to acquire the residual assets of Mohawk Canada through amalgamation with its sub, Mohawk lubricants. So we'll call this lubricants. Okay. I am not going to speculate on what they might be making there. The owner of the residual assets. So then Mohawk owns lubricants, which owns these residual assets. Okay.
Right.
Okay. And they're going to amalgamate that with a different sub of Balaclava, another sub of Balaclava. Okay. So they don't name this other sub, I don't think, of its subsidiary and a subsidiary of Balaclava. The parties disagree on the impact of the amalgamation. So they must mean this amalgamation with Balaclava's sub, unnamed sub, and the lubricants. Yeah. So these two are going to amalgamate. Okay.
So Husky argues that Mohawk Canada disposed of the shares of lubricants in a tax-free rollover.
To whom? Tax-free rollover to dispose of shares of Mohawk in a tax-free rollover.
Well, it's an amalgamation, so...
Yeah, so how could it be a tax-free rollover if it's an amalgamation?
Well, the company that resulted from the amalgamation, I think, would be the...
Is the recipient in a rollover?
Type thing.
Okay. So, and then the Crown says that no, Mohawk Canada
should be
took
taxable.
back shares in the amalgamated entity that were worthless. Okay? So they're saying those residual assets, which is all that lubricants had, and this unnamed sub had nothing. So they're saying those residual assets were worthless. That's what we're saying. And that the only reason to do this thing with the residual assets was to defer capital gains for 25 years. Okay, I think we're going to unpack it, but I think I'm understanding what's happening now.
Yeah, it's a good intro.
Okay, so then this plan also was followed by Balaclava, which allegedly received worthless shares in HB acquisition. But I don't see how that's possible because I thought they said that Mohawk was contributing to HB. I think we're going to find out. This is a bit muddled, and we're going to untangle it. And so then as a result of these mutual promises to accept worthless shares, then something. Then Mohawk Canada should be taxable on the disposition of the lubricant shares and not have this 87.4 rollover. Okay. So we understand the basic idea is that the Crown thinks that there's a taxable disposition, and the taxpayers have argued there's an amalgamation, there's a rollover, there's this, there's that. Okay, and then the Crown is giving alternative arguments for one or more reasons. One is they're saying that Mohawk Canada gifted the value of its shares in Mohawk for the benefit of Balaclava, the parent corporation. No, for the benefit of HB, which is now the parent corporation of Mohawk. Or Mohawk Canada received non-share consideration on the amalgamation involving the lubricants company, contrary to the subsection 87.4 prohibition.
Okay.
Okay, that's A.
That's A. B.
And then B, HB appropriated the value of the lubricants shares for its own benefit, contrary to the prohibition in 69.4 of the Act. Interesting.
Okay.
Or 56.2 applies to the amalgamation. Okay, so I assume Justice Hogan is going to unpack all of this for us in the factual background. What do you think?
Well, I hope there was a factual background and like a legal background, because right now
I'm totally lost.
I'm not well versed into gifting prohibition in 87.4. 69.4, I think, is about fair market value.
Yes, exactly, and related parties.
56.2, quite honestly, I have no idea what this is.
Okay, we'll have to go back and look at it. But I think the way to go is let's follow the judgment and see if he explains it to us.
Factual background. At the outset of the trial, the parties provided me with a statement of agreed facts, along with supporting documents contained in a joint book of exhibits.
Okay.
The appellant called 3 witnesses, Mr. Thomas Lindsay, a senior vice president of Balaclava and a director of Mohawk Canada, Mr. Robert Kopstein, a tax partner with Ladner Downs in Vancouver at the time of transactions, and Mr. Ian McNair, who was the tax director at Husky Oil Limited, Husky or the appellant.
Okay.
The respondent called 2 witnesses, Ms. Sandra Pereversoff, A tax avoidance auditor with the Canada Revenue Agency, CRA, and Mr. Michael Weavers, the appeals officer who considered the appellant's notice of objection. I feel like we've seen Michael Weavers before.
Really?
I don't know. I know that name. I think I've seen this name before. I will quote from the statement of agreed facts before summarizing the witness's testimony and reviewing the relevant documentary evidence. A. The parties. The appellant, Husky Oil Limited, Husky, is a corporation formed under the laws of Canada and is a resident in Canada for the purposes of the Income Tax Act, whatever. On January 1st, 1999, Husky Oil Limited amalgamated with Mohawk Canada Limited. Prior to August 25, 2000, Husky was continued into the province of Alberta. On August 25, 2000, Husky and Husky Oil Operations Limited and Renaissance Energy Limited were amalgamated, with the resulting corporation being Husky Oil Operations Limited.
Okay.
Husky Mohawk Long-Term Limited, HMLT.
HMLT. Okay.
It sounds like it's going to be His Majesty something.
It does sound like that. I was thinking more like BLT, like HMLT. So instead of bacon, lettuce, tomato, it's like ham, mozzarella, lettuce, and tomato.
Well, that's why in tax litigation you never write His Majesty the King long form. It's like HMTK.
Yeah.
His Majesty the King.
Yeah.
So it sounds, or like HMRC, like
HMRC,
His Majesty's Revenue.
Yes.
And Customs. Just kind of interesting. It's not like the Canada Revenue Agency. It's like His Majesty's Revenue.
The royal purse, if you will.
The royal purse. Yeah.
Yes.
Is a corporation formed under the laws of Canada on October 17, 1986. At all times, Husky owned all of the issued and outstanding voting shares of HMLT. The terms of HMLT's common and preferred shares are set out in HMLT's Articles of Amendment.
Okay, let's get some terms.
HB Acquisitions. HB Acquisition, well, not acquisitions, but just acquisition.
Just
because
one.
They wanted to do one acquisition. Was a corporation formed on or about April 1st, 1998 under the laws of Canada.
Okay.
Like, what is going on? They don't know when they formed the corp. It's like about
On or
April
about.
1st.
April Fools.
Yeah, we thought it was a joke, but actually the registrar actually incorporated it, so...
I guess we're incorporated.
I guess we're a corp.
Okay.
HB Acquisitions... It's not acquisitions, but now it's acquisitions.
Yes, the possessive. Yeah.
Initial share capital consisted of common shares. The characteristics of the common shares are set out in HB Acquisitions Articles of Amendment dated June 29, 1998 and September 18, 1998. Balaclava Enterprises, plural, May Enterprises Limited, Balaclava, now known
Belkin.
as Belkin Enterprises Limited, is a corporation formed under the laws of the province of British Columbia and is a resident of Canada for the purposes of the Act. Bell Acquisition Inc. by is a corporation formed under the laws of the Dominion of Canada.
Oh, that's the sub. That's BAI. That's the Dominion.
Whoa, the Dominion.
Whoa.
Woo.
Okay.
So it's a corporation formed under the laws of the Dominion.
Great.
And is a resident of the Dominion.
Wow.
For the purposes of the Act. BAI is a wholly owned subsidiary of Balaclava.
Okay, so I think that's that unnamed sub that we had earlier that's going to amalgamate with lubricants.
Can we know when BAI was incorporated?
No. Sorry, you're not allowed to know that.
Because I'm quite curious, why would you say the Dominion?
Like, how old is that thing?
Yeah, I mean, must be...
That's an old corporation with nothing in it.
I mean, it might be relevant because, as we know, when very old corporations have different treatment, as we know from the case that was a bit like DAC, but not DAC.
Oh, yeah.
Was it Somerset?
Somerset? Yeah,
Was
that
it
sounds...
Somerset? Yeah. So as we know, when you have old corporations, it might be relevant to know when it was formed. Okay, 3470750 Canada Inc. 347 is a corporation formed under the laws of the Dominion of Canada.
In 1998.
On or about June 11, 1998. What?
And it was a sub of BAI. So BAI has 347, and they're both in the Dominion of Canada. I'm clearly not understanding something. Like, when were we a Dominion? And when did we stop being a Dominion? Oh, man, I'm going to have to look this up. Okay. Sorry, but I got to know now. I don't know what I do
believe this is, I'm not sure, but I do believe we were Dominion up until the charter was brought into Canada in 1982. The repatriation of the Constitution.
But this is 1998, so then what the heck?
But we are not a Dominion.
I'm going to ask the internet.
Are we a Dominion? Is Canada still a Dominion?
No. When did Canada stop being
I'm just afraid that I'm going to find out that...
No, this can't be right. Dominion Day, 1982. You were right.
I'm right. Woo.
Okay. The Canada Act refers only to Canada and does not use the term Dominion. No constitutional statute amends this name, nor does any Canadian legal document state that the name of the country is anything other than Canada. The term Dominion was chosen to indicate Canada's status as a self-governing polity of the British Empire, the first time it was used about a country. With the coming into force of the British North America Act 1867, this is Wikipedia, by the way, not ChatGPT. I'm reading Wikipedia, so it has been, there is a human behind it.
Okay.
It says, with the coming into force of the BNA Act 1867, enacted by the British Parliament, Canada became a federated country in its own right. According to James Bowden, writing in the Dorchester Review, I don't know who that guy is or what that is, Ottawa turned its back on its Dominion status in the 1940s and 1950s, impelled by neo-nationalism. So we are no longer a Dominion as of it looks like 1867.
Okay, but if
sorry, I'm wrong. We formed the Dominion in 1867, and we became a federated country with the coming into the force of the... Ottawa turned its back on Dominion in the 1940s and 50s, and then by the time we get the Charter, 1982, that's when.
Okay, but that's quite interesting because if you go to the Constitution Act 1867, the preamble says, where is it? Whereas the provinces of Canada, Nova Scotia, and New Brunswick have expressed their desire to be federally united into one Dominion under the crown of the United Kingdom of Great Britain and Ireland. But then if you look at the actual Constitution, it says, for example, unless it is otherwise expressed or implied, the name Canada shall be taken to mean Canada as constituted under this act, and Canada shall be divided into 4 provinces. So it doesn't say the Dominion.
Huh.
Well, it says Article 3, it shall be lawful for the Queen, by and with the advice of Her Majesty's most honourable private council, to declare the proclamation by, on and after a date therein appointed, no being more than 6 months after the passing of the Act, the provinces of Canada, Nova Scotia, and New Brunswick shall form and be one Dominion under the name of Canada. And on and after that date, those 3 provinces shall form and be one Dominion under that name accordingly. So Canada is still a Dominion legally, but the name is Canada.
Well, we just say Canada.
Yeah.
Dominion of Canada is technically correct, but policy-wise, it doesn't feel right. And when you say a corporation is using the term, when you say a corporation is formed in the Dominion of Canada, you're just being super formal.
Yeah, but I think technically.
Who knew?
Okay, I'm not sure I'm right. I'm really not sure about this. But I think technically Canada is still a Dominion.
That's what I'm hearing from you. It sounds like they formed a Dominion.
Yeah, but they never deformed the Dominion. So we're still
I feel like... Okay, I was today years old. I had no idea. I had no idea.
But I really thought that in 1982...
Right.
Well, maybe it's somewhere in the 1982 Act. I'm reading 1867. Maybe there's someone else.
So the 1867 is the formation.
Yeah.
Dominion. So definitely a Dominion in 1867. Holy cow! We're going on a little rabbit hole here, and we're going to figure this out. So.
I have no idea where we're looking at this.
Because we're confused about
Justice Hogan decided to use the
1998. Corporation formed under the laws of the Dominion of Canada, meaning the federal incorporation statute of the time. So maybe it was called the statute is called the Corporation Law of the Dominion of Canada. I don't know. I mean, the income tax isn't called that, right? It's not called the income tax of the Dominion of Canada.
No, I'm pretty sure it's the Canada Business...
Canada Business, exactly.
Canada Business Corporations Act. Is there like a long title where it's the laws of the Dominion? Well, actually, the real name of the CBCA is an Act Respecting Canadian Business Corporations. The Act may be cited as the Canada Business Corporations Act.
Okay, but wait a minute. There was older legislation called the Dominion Companies Act.
Oh.
The Dominion Companies Act. Yes, so no, but
1934.
Exactly. So by the time you get Canada Business Corporations Act is 1985. So by the time you get to 1998, it shouldn't be the Dominion of Canada. So it's not in that statute. It's saying that the name of Canada, you could call it the Dominion of Canada today. I could go around just saying I live in the Dominion of Canada. Is Dominion the same as Dominican? Is it the same word? Different form?
Dominion? I'm not sure.
Huh.
What is a Dominion?
Well, isn't it a derivative like of domain? Doesn't it mean domain? Hence the territorial, imperialistic, maybe.
Well, according to Google AI, Canada Day used to be called Dominion
Day.
Yeah.
I do know that. Yeah, I did know that. Oh, you just triggered a little memory for me there. Wow, that's weird. Okay.
And according to Google AI, the Canadian government stopped using the term Dominion in official documents by 1951.
Okay, so this is a bit of a relic here. Funny little Easter egg here.
Huh.
Justice Hogan has given us something to think about. I bet there are 20 professors at McGill who could teach me about this Dominion stuff. If I called them up, they would explain it. But I am not the one. I do not know. If you know, drop a comment.
Drop a comment down below.
Down below.
But okay, so my conclusion of law
is I'm ready.
That Canada, the name Canada is the name of the country.
Yeah.
But that Canada is still a dominion.
Yeah.
Because
whatever that means.
Of the Constitution Act.
Yeah.
So we could still say Canada is a dominion.
Yeah.
What does that mean? I don't know.
Yeah.
Like, hey, Canada is a dominion.
I mean, technically it's right because look, we still have the Governor General representing the Crown.
Yeah. True.
Right? So, I mean,
I think the idea is that Article 3 of the Constitution Act is the king, yeah.
Yeah.
I think Article 3 of the Constitution Act saying we formed a dominion was never repealed.
That's right.
Or amended.
That's right.
So we form a dominion.
And there it is. It's still here.
Okay, cool.
Okay. Now we know.
Okay. So 3470750 Canada Inc. 347 is a corporation formed under the laws of the Dominion of Canada.
Okay.
In 1988 and is a resident in Canada for the purpose of the Act. At all material times, 347 was a wholly owned subsidiary of BY. Mohawk Canada Limited was a public corporation formed under the laws of the Dominion of Canada and was resident in the Dominion for the purposes of the Act. Mohawk Canada carried on the business of an automotive fuel retailer, the retail business, and its common shares were listed on Toronto Stock Exchange, the stock exchange of the Dominion, of course.
Okay, right.
Mohawk Lubricants Limited, was a corporation formed under the law of British Columbia, which is, of course, a province of the Dominion, on October 19, 1981, and was continued under the Canada Business Corporations Act on July 2, 1998, and was resident in Canada for the purposes of the Act. Mohawk Lubricants, a wholly owned subsidiary of Mohawk Canada, carried on the business of re-refining, and distributing recycled oil. Mohawk Lubricants also owns certain other assets. Shares of Pound Maker Ag Ventures Limited.
Ag Ventures.
That's
not a typo?
No, it's not.
Shares of Pound Maker Ag Ventures Limited. Do you think like pounds as in like the currency? Like they make... I'm so confused right now. Okay.
I think I need to Google this. Pound Maker.
We're struggling. We are struggling with this case. We can't get past paragraph 8 because there's so much weirdness in this case. Okay. So we have a Pound Maker. Okay, it just sounds completely crazy. Refining and distributing recycled oil and owning shares of Pound Maker Ag Ventures Limited. Okay, it's a company. Pound Maker Ag Ventures. Not adventures, not inventions, but Ag Ventures.
I found their Facebook page and it doesn't quite help.
Okay, it looks like rocks. I mean, I wish you could show this on the stream. That's a little hard to show. But yeah, that's wow. Okay, they still exist. Pound Maker Ag Ventures is still
nice picture of
still with us.
Cow.
Okay, so bring me back.
Pound Maker apparently.
Oh, it's a place.
It's a place in Saskatchewan.
Shut up. Shut up. No, it's not. Okay. Pound Maker, Alberta. Are you kidding me? Okay. Sorry.
So
Come on.
Canada's first integrated feedlot / ethanol facility. Pound Maker.
A feedlot.
A feedlot for cows? I'm not quite sure what this is. Okay, so Pound Maker was established in 1970 when local area farmers were looking for an alternative market for their grain. A 2,500 head feedlot was constructed to utilize this grain with 50 local area farmers as shareholders. Today, we're a fully integrated 26,000 head feedlot and 14 million liter ethanol plant.
Okay.
I'm not quite sure.
They sell
what
ethanol,
this is,
grain and ethanol.
but they make cow go moo.
Okay. I got it.
Okay, so
got
there's this picture with a guy with a cow, and it says,
He looks
either
happy.
you like cattle or you're wrong.
Oh. Welcoming a particularly friendly guy after his trip through the chute. I'm sorry, cow. You're probably met an untimely demise.
So,
My
do you like
apologies.
cows or are you wrong?
Well. Wow. Okay. I don't know what to say, but yes.
I think we should say now, do you like tax law or are you wrong?
Or you're wrong. You either like tax law or you're wrong.
Yeah, that's a good one.
Yeah.
Either you like tax law or you're wrong. That's it.
Okay. Anyway, the point is, Mohawk owns shares of this other company called Pound Maker Ag Ventures, and they also Mohawk Lubricants also owns something called Jade Royalty and Jade Inventory, the Jade investment, and other assets, and all of that stuff is called residual. So the Pound Maker shares, the Jade stuff, and all that stuff, that's the residual. Okay.
Sorry.
No worries.
At all times material to the spiel, Husky and HB acquisition were not related to Balaclava Buy and 347, and Balaclava Buy and 347 were not related to Mohawk Canada and Mohawk Lubricants.
Right, okay.
Okay, cool.
Yeah.
We have like two groups of companies.
Yeah.
Prior to July 8, 1988, Husky and HB acquisition were not related to Mohawk Canada and Mohawk Lubricants.
Okay.
Where the expression related is used in this agreement, the parties agree that the expression refers to its meaning in and for the purpose of subsection 251 and 252 of the Act.
Okay.
Upon HB acquisition tendering its notice to take up and pay for Mohawk Canada shares tendered to its joint bid on July 6, 1988, as further particularized at paragraph 35 herein, Husky and HB acquisition became related to Mohawk Canada and Mohawk Lubricants because they did the takeover with HB.
Yeah, although I don't see how Husky got in on that. I do see how Balaclava got in
Well,
on
Husky was a shareholder of HB. So now, because everyone owns everyone.
Okay.
Facts related to Mohawk and events leading up to the transaction. At all material times prior to July 8, 1988, a control block comprising 42% of Mohawk Canada's common shares was held directly or indirectly by one shareholder, Hugh B. Sutherland, while, I guess that's HB, while a further 23% of the common shares of Mohawk Canada or debentures convertible into common shares of Mohawk Canada were owned by Balaclava. The remaining 35% of Mohawk Canada common shares were widely held by the investing public, including common shares who owned directly or indirectly by employees of Mohawk Canada.
Okay.
Again, I always find it fascinating that a company publicly listed is not like majority owned by the public.
Like there's public shareholders, but
it's just 35%.
And the public shareholders would never have control in that case.
Yeah. Well, they will have minority rights. If you want to learn
fair
more
enough.
about this, go to my class.
Yeah, go to BizAss next week.
Starting
next week.
Next Monday. But don't go on Monday. It's going to be, go if you're one of my students, but don't go if you're a member of the public that want to just attend.
Because they're just going to be the annual reading of the syllabus.
Yeah. But if you're a student, that's important.
Read the syllabus.
Read the syllabus. Also, I'm going to talk about grading and exams and
all that.
So you don't want to miss it. If you're a student, if you just want to come to chill and enjoy business associations,
come in
probably
September.
not the best.
Come in September.
Yeah, September, October, November. But not in August.
Agreed. Okay.
In June 1987, the Board of Directors of Mohawk Canada, the Mohawk Board, established a special committee of the Mohawk Board, the Special Committee, to assist the Mohawk Board in developing and evaluating strategic alternatives available to Mohawk Canada to enhance shareholder value.
Okay.
Okay, so they did a special committee to get more shareholder value. After considering a number of alternatives, the Mohawk Board accepted the special committee's recommendation that financial advisors be retained to explore a sale, merger, or other business combination involving Mohawk Canada's retail business. CIBC Wood Gundy Securities Inc., Wood Gundy, was appointed as financial advisor to the special committee, and Mohawk Canada announced its strategic intentions in a press release to the public on or about September 23rd, 1997.
Was CIBC also the bank in the Husky?
Yeah, and funny enough, Lee Ka-shing owned part of CIBC in those days.
That's right.
So it's all a circle.
It's all a circle. Yeah. Okay.
From September 1997 through January 98, Wood Gundy actively solicited bids for the acquisition of the retail business.
Okay, so they're looking to get rid of
Canada.
this Mohawk Canada. Mohawk Canada is looking to either get rid of its business or get some more investors or something.
Yeah, like they want to enhance shareholder value.
Okay.
Which is, it's part of the duties of the board.
Sure.
But is it the only one? If you know what to do.
Go to class.
Go to class.
You're good at advertising this class. Good job.
Oh, yeah.
I'm impressed.
Everyone is hyped up. So
hyped up.
Oh,
Can't wait.
They cannot wait.
To learn about BizAss.
Like they already like, can we get class like today? Yeah. Can you do a special class?
Can we do extra class?
Yeah. Can we do class before class? Like usually we do an after class
Bonus
podcast,
class?
but they want
the
before
class.
Yeah. By early December 1997, Wood Gundy, I'm gonna call it Woody. Woody had received non-binding expressions of interest from 7 parties, including Husky, who had reviewed a confidential information memorandum concerning Mohawk Canada's retail business. Okay. On December 9, 1987, the Mohawk Board allowed several of these parties, including Husky, access the data rooms to allow them to engage in detailed due diligence investigation of their retail business before being invited to make a final acquisition proposal.
That's fun. That was lawyers who went in there and sat on folding chairs and looked through a warehouse full of documents to try to find, information. They probably worked over the weekend. And what day is December, by February 11th?
December 9.
December 9. 1997. It always happens at the end of the year.
Always in December.
And then if there is a deal, oh boy, are you working? You're working. December 7th. I'm going to find out what day of the week it is.
December
if
9.
It was Saturday. I know, but I want to know if it was Saturday.
Yeah.
Okay, I'm going to find out. Keep reading.
Well, I think we should get a new movie called The Data Rooms. It's a room filled with boxes and boxes of documents.
Yeah.
And you're doing a due diligence. And that's the movie. Like, just someone looking at papers.
Yeah. It's a really exciting, fast-paced. It was a Tuesday.
Okay,
it was
not so bad. Upon completion of this due diligence process described in paragraph 16, 3 parties, one of which was Husky, were invited by the Mohawk Board to submit proposals for the acquisition of the retail business. By February 11, 1998, the Mohawk Board, in consultation and with the recommendation of Woody and legal counsel, decided to enter into exclusive negotiations with Husky, as well as Balaclava, with a view to implementing a plan of arrangement under the Canada Business Corporations Act, whereby Husky would acquire the retail business.
Okay. Well, it can't be worthless.
It's worth a lot. It took like 2 months to get an offer.
Yeah.
At all material
had
times,
7 offers.
Husky made it clear that it would not participate in any transaction that would result in it acquiring the residual assets.
Wait, what?
Okay, they don't want
Oh,
residual.
they want the retail business. They don't want the residual
They
assets.
don't want the cow feeding.
Okay, we've got ourselves a win biz, lost biz situation here. This is great. This is like the premise. We should be writing plots. We've got a narrative here. It's always the same. We've got bad biz, like Cineplex, like Dean's Night, like whatever you want. Bad biz is bad, and we got to get rid of it.
Pink lemonade.
Pink lemonade business is bad.
Yeah.
We got to get rid of it. We got to keep yellow.
But I want the good one.
I want the good one. I don't want the bad one. So we got to get rid of the bad stuff. Okay, I've got it. Bad. We've got this narrative now. Okay. Yes. Good.
On February 11, 1998, the Mohawk Board established an independent committee, the Independent Committee, to examine and make recommendations to the Mohawk Board on any proposal to acquire the residual assets. The Independent Committee retained RBC Dominion Securities Inc.
No, that's true. Dominion. That used to be called RBC Dominion. Yeah.
So the Royal Bank of the Dominion of Canada to assist the Independent Committee in its mandate to provide a fairness opinion in connection with any proposal to acquire the residual assets.
Okay.
Initially, Husky was only prepared to pay $90 million for the retail business of Mohawk Canada, but later increased it to $103 million. As a result of the negotiations amongst the Mohawk Board, including its independent and special committee and their financial advisors in Balaclava, a transaction, the structure, was created that would see a... Okay, now is the important part.
Okay.
So Husky acquired a retail business for its stated and firm acquisition price of $103 million.
Okay.
Balaclava acquired the residual assets. And C, Husky and Balaclava participate in a joint bid for the common shares of Mohawk Canada at Husky's acquisition price of $103 million.
Okay, it's very strange. Acquire the retail business for 103. Okay, so I think you were Husky and I was Balaclava?
I'm a Husky.
Okay, so you're getting the retail business in handing over 103 to Mohawk. Then I'm acquiring the residual assets. That's the Pound Master, the Pound Seeker, the Pound Staker,
Pound Maker,
Ag Venture, and the Jade and the other stuff.
Yeah.
And then we together do a joint bid for the common shares of Mohawk for $103 million. So this is very strange. I'm a little confused.
I feel like I'm paying twice.
Yeah. So you paid 103 for the retail business.
I paid the biz, so now I have the biz.
You have the business, and now the company has nothing. You have the business, and I have the residual assets. The company should have nothing. Why is there $103 billion, $30 million joint bid for the common shares?
So you're telling me the business is valued at 103, but now it's just a shell, and it's still valued at 103 million?
Something seems wrong.
Something is weird. Okay, but let's continue. Maybe we're going to figure out. By late April 1998, Husky advised a special committee that it was prepared to explore the possibility of a joint acquisition of all the common shares of Mohawk Canada through a joint takeover bid with Balaclava. The Mohawk Board then expanded the mandate of the Independent Committee to review and to make recommendations concerning any joint takeover bid made by Husky and Balaclava, the joint bid. The Independent Committee was assisted in assessing the joint bid by Whitty, who were also retained to provide a fairness opinion from a financial perspective to the shareholders of Mohawk Canada concerning a joint bid.
Okay, I assume the fairness opinion is to say, like, it's okay for the minority shareholders. Yeah,
I think that's it.
In order to know more, what should people do?
For joint bid, I mean, there's going to be class, I think, and takeover.
Minority shareholder rights.
Minority shareholders and takeover, but that's going to be late in the semester.
Late, so
probably
they gotta
November, December.
Yeah. All right.
So if you want to explore these topics, it's not on Monday. It's much later in the semester. So if you're a member of the public not enrolled in my class, well, send me an email and we're going to figure things out.
There you go.
Also, I'm losing a new class and because of the elections.
I know, that's it. Very okay.
Yeah.
You're gonna have a Wednesday that's a Monday, aren't you?
I will. Oh. It's gonna be a Thursday that's a Monday.
Oh, brutal. Okay.
So that's really Ukrainian.
No, it's terrible. I hate those.
But please, do not visit my class on election day. Go vote.
Go vote.
I'm not gonna be there.
Everybody vote.
I'm gonna vote.
Yeah.
It takes the whole day apparently to vote.
By law, you have to be given 4 hours, I believe.
But I found out that by law, and this is just for provincial elections, that if you're an education institution, you have to give your institution to the government, and you have to be closed.
Oh.
Because the polls are in the schools.
Yes.
So you have to give your school to the government on that day.
Well,
and that's why all schools are going to be closed on election day.
Okay, makes sense.
Joint bid.
All right.
By early June 1998, Husky and Balaclava entered into a joint bid agreement for a takeover bid of all of the outstanding common shares of Mohawk Canada not owned by Balaclava by OHB acquisition at a cash price of $725 per share. The $725 cash offer, the offer, was not available to buy as it was a joint bidder. It was a condition precedent to the offer that 90% of the Mohawk Canada common shares be deposited to the offer.
What's with the ... period?
I don't know, ... period. Looks
like
we're missing
text
something
for some reason. Yeah.
Sutherland HB acquisition as the offer under the joint bid agreement, and Husky entered into an agreement, the lockup agreement, under which Sutherland agreed to deposit or cause to be deposited to the offer all of his common shares or debentures convertible into common shares of Mohawk Canada.
Okay. ...
HB acquisition, Husky, Balaclava, Bay, and Mohawk Canada entered into an agreement, the support agreement, under which HB acquisition agreed to make the offer of the Mohawk Canada, agreed to recommend to its shareholder that they accept the offer.
Okay.
The independent committee received a fairness opinion from Woody, the Woody Fairness Opinion, that the offer contemplated under the joint bid agreement was fair from a financial point of view to the Mohawk Canada shareholders. And the independent committee received a fairness opinion from RBC Dominion, the RBC Dominion Fairness Opinion, that Balaclava's proposed acquisition of the residual assets, and specifically the price offered by Balaclava in its acquisition of the residual assets, was fair from a financial point of view to the Mohawk Canada shareholders. If sufficient common shares of Mohawk Canada were deposited under the offer, Balaclava agreed and was obligated to convert all debentures held by it into common shares of Mohawk Canada to transfer the HB acquisition 2,854,267 common shares of Mohawk Canada. At the $725 per share offer price, these shares were to be transferred in exchange for instruments totaling $20 million something dollars as follows: 9.5 million shares of HB acquisition at $1 per share. $1 is $1. Cash in the sum of $5 million, equivalent to $1.82 for Mohawk Canada common shares owned by Balaclava, and C, a promissory note by HB acquisition payable to buy in the sum of $5.9 million.
Okay.
Under the joint bid agreement, Mohawk Canada, Balaclava, and Bay negotiated an option and put agreement, pursuant to which Mohawk Canada granted an option to buy to acquire the shares of Mohawk Lubricants, which owned the residual assets, for consideration that included a non-interest-bearing promissory note in the amount of $9.5 million, maturing in 2023.
Wow. Okay.
Woo! I think someone should take, what is it, the securities class here?
Yeah.
I'm not teaching that one.
Yeah.
Not sure
a mess.
who is.
Yeah.
Non-interest-bearing promissory note maturing in 2023.
Come on.
Why would you want a non-interest-bearing promissory note in 20 years?
Yeah, I think that is where the market value. There's a problem there.
Yeah.
There's a problem.
I mean, this is not possible on the market. Like,
Impossible.
there's no way.
No one will lend or borrow. I mean, people would borrow, but nobody will lend on those conditions.
I'm lending $9.5 million, and you're gonna
no
give
interest.
it back in 20 years.
Yeah. Face
All
value.
risk.
Yeah.
I mean, I'm taking all the risks, and I'm not getting anything in return. That's not possible.
No, it's impossible.
Guys, that's not possible. It's inconceivable. You know why?
Inconceivable!
Yes. Exactly. It is. I agree. Okay.
So you see that kind of thing, and you go.
Yes.
In addition,
Yes,
under
this is
this
wrong.
agreement, Buy granted a put option to Mohawk Canada under which Buy could be required to purchase the common shares of Mohawk Lubricants for the same consideration.
Okay.
An option and a put. So if you don't know what is an option and a put, I don't know. It's not my class. So
Yeah, but it is. I do usually teach that. So you could take tax class. You could go to tax class.
go tax.
You might
class.
get there.
And you're gonna know what is a put and an option and a
Yeah, because I'll talk about Ferlino at some point, and then I usually get puts and options in there somehow.
options are cool.
They are cool.
They are cool.
Yes. Okay.
Once you know what an option is, it changes your life forever.
It does. You can never unknow that. You
Yeah.
can never go back to being innocent.
Yeah.
Yeah.
But now you look at like financial news and you understand like why people buy options and you get
Yeah.
If you don't know actually this, just go watch what is it, The Big Short?
The Big Short.
The Big Short,
Excellent. That's probably the best movie ever in terms of teaching basic financial literacy. Love it.
And
Absolutely love it.
I realized recently that knowing what a short is, I
Yeah.
understood the title as being a big short.
Yeah.
But when you don't know what a short is,
Yeah,
it
yeah.
sounds like it's a big and it's short.
It's big shorts.
Yeah.
Yeah.
But it's funny how
It's like basketball
you-
shorts.
you know,
They're very
you
big
will-
shorts. Yeah.
You can only understand the title if you know what a short is.
Yes, right.
It's
right.
quite funny.
Yeah.
Husky was not a shareholder of Mohawk Canada when the option and put agreement was negotiated. The option and put agreement was amended by an agreement dated July 7, 1988, amongst Mohawk Canada, Balaclava, Buy, and Husky. The amended option and put agreement, which modified the option and put agreement in the following manner.
All right.
What else? Mohawk Canada, instead of receiving an SIC non-interest-bearing promissory note issued to it for Balaclava's acquisition of the original assets, would instead receive preferred shares issued pursuant to amalgamation of Mohawk Lubricants and 347.
Okay. Okay.
That's a bit better. I would receive preferred shares of HB acquisition that were redeemable for a non-interest-bearing note maturing in 2023 as part of the consideration for transferring its shares in Mohawk Canada to HB acquisition, instead of directly receiving a promissory note having the identical terms. Huh?
Okay.
The amended option and put agreement was made after Husky and HB acquisition had entered into the support agreement after they had mailed the takeover bid. Under both the option and put agreement and the amended option and put agreement, Buy agreed it would not, prior to June 1st, 2023, demand payment of the principal of the promissory note of $5.9 million from HB acquisition unless the amalgamation of Mohawk Lubricants did not occur by September 30th, 1998, and Balaclava gave notice to redeem its 9.5 million common shares at $1 per share.
Okay, so they had a cancellation
Okay.
clause. Yeah.
Still, it's kind of...
I mean, it's really messy, so, yeah.
I said 20 years, but it's actually 25 years.
Yeah.
Like,
Yeah.
well, okay. Pre-closing transactions. On or about May 20th, 1998, Balaclava transferred 2.2 million common shares of Mohawk Canada and 2.5 million of convertible debentures issued by Mohawk Canada to Buy in exchange for 100 common shares of Buy. Balaclava and Buy jointly elected to have the provisions of Section 85.1 of the Act, subsection 85.1, thank you, of the Act, applied to the transfer described in paragraph 30. The agreed amount was $11.1 million, which amount was equal to the ACB of the common shares to Balaclava.
Okay.
On July 3rd, 1988, Mohawk Canada transferred all of its shares it owned of Poundmaker at Ventures Limited, the Jade Royalty, and the Jade Inventory to Mohawk Lubricants in exchange for 2.5 million preferred shares issued by Mohawk Lubricants from Treasury.
Okay, that's pretty weird because I thought lubricants owned that stuff at the beginning, but okay, fine.
Yeah.
Must have been owned by Mohawk Canada and then transferred into
Yeah. Okay.
lubricants. Yeah.
On July 5th, 1988, Mohawk Lubricants declared a series of 48 separate dividends in the amount of 100,000 each.
What?
What?
Okay.
Well, it's like I really don't want to do a 4.8 million buck dividend. That's way too much.
Let me do 48 of 100 each.
Yeah.
No one will notice if I do that.
48.
Just do 48.
And by the way, my legal fees are per
That's
dividend.
every 2 weeks. Like, come on. What?
No, but I think they declared it all the same day. Didn't
declared a series of dividends in the amount of 100,000 each. Dividends paid by the issuance. Oh yeah.
Yeah.
What the heck?
The dividends were paid by the issuance of 4.8 million preferred shares issued by Mohawk Lubricants from Treasury. As they issued an outstanding shares of Mohawk Lubricants had safe income equal or in excess of the declared dividend, the provisions of 55.2, subsection 55.2 of the Act were not applicable.
All right. Well, there's a safe income. That's
Safe
an old.
income
That's a safe
thing,
income
yeah.
thing. Yeah. Okay.
As at July 5, 1998, Mohawk Canada owned one common share
Just one.
and 7.3 million preferred shares of Mohawk Lubricants, the ACBs of which were $2.5 million and $7.3 million respectively. And if you want to know how you can get one share with an ACB of $2.5 million, take it's like half my class and half corporate tax.
Yeah,
like if you do these two classes, you're gonna get it.
You'll get it all. Yeah.
Because I'm gonna do legal puck, and this is something that's gonna be very hard for me.
Stated capital?
Yeah, but the legal version of it, not the tax version.
Yeah.
So you can do whatever you want.
Yeah. Stated capital. Yeah. Very flexible.
Legal puck.
Crazy.
Yeah.
Crazy at what you can do in the corporate law statutes. It's a wild area. Okay.
Closing transactions.
All right.
We're gonna get somewhere. On July 6, 1988, 9.4 million. No, what? Yeah, 9.4 million Mohawk Canada common shares, excluding the Mohawk Canada common shares held by BAG, the tendered shares, were validly deposited pursuant to the offer. In total, 98.2% of the total outstanding Mohawk Canada common shares held by BAG, Sutherland, and the investing public were deposited pursuant to the offer. On July 6, 1988, Husky, through an indirect wholly owned subsidiary, Husky Mohawk Holdings Limited, subscribed for 103 million common shares of HB Acquisition for $103 million, the Husky subscription. Out of the $103 million, HB Acquisition used $73.5 million to acquire the tendered shares. On July 7, 1998, BAG sold 2.8 million common shares of Mohawk Canada to HB Acquisition in exchange for $5.1 million in cash on hand as a result of the Husky subscription, a non-interest-bearing demand promissory note in the amount of $5.9 million, the buy note, and 9.5 million common shares issued by HB Acquisition from Treasury at a value of $1 per common shares. The 9.5 million common shares represented 8.5% of all the issued and outstanding common shares of HB Acquisition.
Okay. Wow.
BAG and HB Acquisition jointly elected to have the provisions of subsection 85(1) of the Act apply to the disposition described in paragraph 37. The agreed amount was $11.1 million, which amount was equal to the adjusted cost base ACB of the Mohawk Canada common shares to BAG. Okay. On July 7, 1988, Husky Mohawk Holdings Limited, Balaclava, BAG and HB Acquisition entered into a shareholders' agreement, under which the parties agreed to not transfer any common shares of HB Acquisition other than in the manner contemplated in the shareholders' agreement and the amended option and put agreement. Husky, Balaclava, BAG, and Mohawk Canada entered into the amended option and put agreement, under which BAG was granted an option to acquire all of the common shares of Mohawk Lubricants pursuant to amalgamation of Mohawk Lubricants and 347. Under the terms of the amended option and put agreement, BAG could assign its option to any person affiliated or associated with BAG. On July 8, 1998, BAG exercised its option under the amended option and put agreement to acquire the shares of Mohawk Lubricants by way of amalgamation, the amalgamation. B347, Mohawk Lubricants, Mohawk Canada, Husky, and Balaclava entered into an amalgamation agreement, the amalgamation agreement under which 347 and Mohawk Lubes would be... Whoa.
What?
What? Who is Mohawk
We have
Lubes?
a new character.
What?
Would amalgamate to form Mohawk Lubricants. Lubes Amalco.
So
Oh my God.
Why
okay,
is it
I don't know.
Mohawk Lubes?
I do not know.
That
Yeah, we just all of a sudden have a new character in our. I don't think we've seen Mohawk Lubes until now. And also, why are they saying they would amalgamate to form Mohawk Lubricants Limited, which we're going to shorten to Lubes Amalco? Very
I think
strange.
it's a typo. I think
347 and Mohawk Lubricants.
would amalgamate to form Mohawk Lubes Amalco.
Yeah, I think so too.
And I'm just gonna drink
Very
a little bit
strange.
of water because I'm feeling losing.
Okay, I'll read C. Upon the amalgamation, Mohawk Canada received 7.3 million Class A preferred share of Lubes Amalco for the preferred shares it held in Mohawk Lubricants and 8.1 million Class B preferred shares and 1 Class C preferred share of Lubes Amalco for the common shares it held in Mohawk Lubricants. Upon the amalgamation, buyer received 1 common share of Lubes Amalco. Honestly, it's just a little uncomfortable, these names, in exchange for its common share of 347. And the share capital of Lubes Amalco is described in the certificate and articles of amalgamation dated August 1, 1998. Okay, so following the amalgamation, the shareholders of Lubes Amalco, which I had, circled on my thing and just called the amalgamated company, were as follows. We have got Mohawk Canada with no common shares, 7.3 million Class A preferred, 8.1 million Class B, and 1 Class C preferred, and buy with 1 common share and nothing else. That is bizarro, but okay. Now we come to post-closing transactions. Okay, now it's September, so fast forward a month. You get a month, first-year law associates. You get a month to put all of this together and paper it all up. On September 29, 1998, buy transfers 9.5 million common shares of HB acquisition to HMLT in exchange for 9.5 million preferred shares of HMLT issued from the Treasury. Buy and HMLT jointly elect to have the provisions of subsection 85(1) of the Act apply to the transfer. The terms of HMLT's preferred shares described in paragraph 42 are set out in HMLT's Articles of Amendment. And then the very next day, September 30, HMLT transferred 9.5 million common shares of HB acquisition to Husky in exchange for 9.5 million preferred shares of Husky issued from the Treasury. HMLT and Husky jointly elected to have the provisions of subsection 85(1) apply to the transfer. So they're moving stuff around, moving shares around, share for share swap, etc. Blah blah. Next day. No, not next day. Couple months later. 2 months. November 30.
2 months, yeah.
2 more months. Lubes Amalco gave notice that it would redeem and did redeem the 7.3 million Class A preferred shares owned by Mohawk Canada. The redemption price was paid by the issuance of Lubes Amalco of non-interest-bearing promissory note. So nobody gets anything, right? It's just notes.
Yep.
And HB Acquisition and Mohawk Canada enter into an assignment and assumption agreement pursuant to which Mohawk Canada agreed to pay the buy note, in consideration for which HB Acquisition gave Mohawk Canada a promise to pay $5.9 million on demand to Mohawk Canada. Buy and Lubes Amalco entered into an agreement pursuant to which Buy assigned its rights under the buy note to Lubes Amalco, in consideration for which Lubes Amalco gave Buy a non-interest-bearing promissory note due in 2023 in the amount of $5.9 million, the assignment note. Finally, D, Mohawk Canada and Lubes Amalco agreed to set off and cancel the buy note and the Mohawk note, with Lubes Amalco issuing in favor of Mohawk Canada a new non-interest-bearing promissory note due in 2023 the amount of $1.4 million, the set-off note. Kids, if you're following at home, there's a lot of nonsense going on here. And whenever you see P notes, it just usually means things are being passed around until they're in the right hands. They're in the hands of the people you want. And the P notes always get canceled off or set off or whatever. They get ignored till much later. So it's messy corporate structuring. Back to you, Raphael.
Thank you. Other? ...
That's what you get.
We are gonna know.
Fine, I'll read H. Assessments, reassessments, and objections leading to the appeal. Oh, good. We're finally to where we are. The assessment under the appeal was made by notice of reassessment under the Act dated February 26, 2004, with respect to the appellant's tax year ending December 31, 1998. So the 6 years, okay? The appellant filed a notice of objection in a timely fashion. The minister confirmed the assessment under appeal by notification of confirmation made November 10, 2005. I will be using the defined terms from a statement of agreed facts throughout my reasons for judgment unless I indicate otherwise. Okay, we're on to evidence.
Okay. Mr. Lindsay's evidence.
Yeah.
Mr. Thomas Lindsay was called as a witness to provide the court with an overview of the circumstances that gave rise to the acquisition of Mohawk Canada. Mr. Lindsay testified that the Mohawk Canada board members, the board, met to discuss the low trading range of the Mohawk Canada shares in the spring of 1987. The stock was thinly traded on the TSX, and the board felt that the trading price did not reflect Mohawk Canada's inherent value. He explained that the low stock price meant that Mohawk Canada's cost of capital was higher than its competitors, making it expensive for Mohawk to raise capital for the purpose of refurbishing its 360 service stations. A special committee, the special committee of the board, was set up to review strategic options and to make recommendations to the board as to how shareholder value could be maximized. The options considered by the special committee included the rearrangement of Mohawk Canada's capital structure and the sale or merger of Mohawk Canada's retail business. Mr. Lindsay testified that the board spent 3 months reviewing the strategic alternatives. The special committee finally recommended to the board that Mohawk Canada hire financial advisors to guide it through a sales process. CIBC Woody and First Capital were hired to assist the board. The financial advisors prepared a book on Mohawk Canada that was given to interested parties who were likely to submit expressions of interest. Husky was identified as an interested party as it made overtures to acquire Mohawk Canada in the past. Mr. Lindsay explained that Mohawk had a very good footprint in Western Canada with 360 service stations, and the board was confident that the process would result in an offer as a substantial premium over Mohawk Canada's trading range of $3.50 to $4.50 per share. However, the task of selling Mohawk Canada was not without its own unique set of challenges. A preliminary analysis had indicated that all of the likely buyers would be interested in making offers for some or all of Mohawk Canada's retail business. They were not interested in the residual assets.
It's a Cineplex all over again.
Yeah, really. Like, they're not interested in feeding cows, but service stations are cool. In January of 1988,
They don't like cows? That's wrong.
Yeah, that's wrong. They're wrong.
They're wrong.
You know, it's either you like cows or you're wrong. If you just joined the podcast, it's too long to explain.
We'll fix it later. Or you're wrong is going into my notes here. Okay. Yes.
In January of 1988, Mohawk Canada's financial advisors recommended to the board that Mohawk Canada should enter into an exclusive negotiations with Husky. Husky had made an initial offer of $90 million to acquire the retail business in an asset-based transaction. This was the best offer received. Mr. Lindsay testified that he worked on several plans to deal with the residual assets that included keeping these assets in Mohawk Canada after the retail assets has been sold, or transfers the assets to a new corporation that would be transferred to Mohawk Canada shareholders as a dividend in kind, thus paving my mouse was under the V, paving the way for a sale of the shares of Mohawk Canada. The latter option was preferred, as it would have resulted in the lowest amount of corporate taxes having to be paid. It became quickly apparent that neither option would work.
Oh.
Womp womp.
That.
I need a bigger soundboard.
I know, you do. It's true.
I need a specific one. I need the one like
with all
here,
the I know.
and like a piano.
I
and
hear
if
what you're saying.
I'm doing combinations. It would do different sounds.
I can give you I can attach a piano to that for you, if you want to play piano.
Okay, now we're talking. It became quickly apparent that neither options would work. Mr. Sutherland's desire for an all-cash transaction in the $7.50 per share range could not be met. Additionally, the investment bankers advised the board that the new public corporation would be too small to attract public shareholder interest.
Okay.
Mr. Lindsay came up with the final plan, under which Balaclava would end up owning Mohawk Lubricants, being the main asset, the Jade inventory, and the Poundmaker shares, previously defined as the residual assets.
Yeah.
Husky would purchase Mohawk Canada, which would continue to own the retail business, the Minnedosa ethanol plant, and an insurance policy. This plan meant that Mr. Sutherland and the public shareholders would receive an all-cash payment for their shares, while Balaclava would receive a much smaller cash payment, and the residual assets were interested in Mohawk Canada.
Okay.
As Balaclava was a significant shareholder of Mohawk Canada, an independent committee in the board was appointed to oversee the fairness of the transaction, with RBC acting as its financial advisor to provide a fairness opinion on the related party transaction.
Okay.
Mr. Lindsay testified that while Balaclava was in the solid waste recycling business, it did not have experience operating an oil recycling plant. Balaclava was willing to acquire the residual assets in order to allow the broader transaction to proceed. Mr. Lindsay explained that this was a better alternative to a failed transaction in which Balaclava would be left holding a significant interest in the company whose stock was thinly traded at prices significantly below what Mr. Lindsay believed was Mohawk Canada's inherent value. Mr. Lindsay testified that as a board member, he was well aware of his fiduciary duties to maximize value for all shareholders.
I don't know what this is. It a clap? Are we clapping for that? I don't actually know. Do you feel happy about that or?
Well, as we will see in my class, I do believe that the duty of the board is not only to maximize shareholder value,
right,
but is broader.
Yeah.
Because the input of a corporation is not just the shareholders.
Right.
It's the
Social,
employees.
yeah.
It's social, environmental duties.
Yeah.
It's society at large. So you cannot say that the sole duty is I want to maximize my shareholder price.
Yeah.
There is more.
If it's unsustainable or if it's going to create problems that then put the corporation underwater, that's not going to happen.
And ultimately, and this is what you will see in the Peoples, which is a case on the Supreme Court, is that the duty of the board is not towards the shareholders, but towards the company.
Right.
You have to do what is good for the company.
Yeah.
And thinking about all the inputs of the company, being shareholders, the employees, the environment, society at large, you must do what is good for all these actors.
Yeah. Yeah.
Because if you only think about shareholders, you will be able to get maximum value, but at what cost?
Yeah, at what cost exactly?
So
okay,
that is my stake on this sentence from Justice Hogan. But again, this is not Justice Hogan saying this is the law.
He testified. Lindsay testified.
The guy said that. Well, actually, I'm a bit concerned by having the board member saying my duty as a board member
is to maximize
the value of our shareholders.
That's not your duty. Interesting. Yeah, interesting. Yeah. Okay.
I'm a bit concerned.
Yeah, okay. I hear you. I share your concern. I'm listening and I hear what you're saying. Yeah.
But I feel like this is like shareholders meeting and you have the guy from the board saying, "Hi, I'm a member of the board and my duty is to get more cash for you. With me, you will get cash.
With me, you get
in
cash.
your pockets.
Yeah.
Because $1 in your pocket is better than $1 in an employee's pocket."
Wow. It got really dark all of a sudden. Okay. Bleak.
And this is why it cannot be right.
No.
Because if this were right, then what I just said would be right.
Wrong.
And it's wrong.
It's wrong. Okay. It's like not liking cows. Okay.
Okay. So if ever you're writing a case comment on People's, well, don't quote me, please.
Okay.
In light of that, he delegated the role of negotiating the transaction for Balaclava to Mr. Gordon Powell, the CFO of Balaclava. He expected that Mr. Powell would consult with him only if he had a problem negotiating the terms of the transaction with the independent committee and its advisor. It did not get involved in the design of the structure nor in the details leading to its implementation. His CFO turned to Balaclava's legal counsel, Ladner Downs, for commercial and tax advice. KPMG, Balaclava's auditors, also played a role in the transaction.
Okay.
Everyone sent a bill at the end.
Yeah, in the end, that is absolutely true, yes. All right.
Okay, let's go to Mr. Kopstein's evidence.
Okay.
Is it Kopstein or Kopstein?
Sure. I don't think it matters.
Kopstein?
Yeah.
Mr. Kopstein testified that his firm was approached by Mr. Powell to advise Balaclava on how a joint bid could be structured between Balaclava and Husky using a transaction structure which would allow Husky to acquire the retail business and Balaclava the residual assets. Mr. Kopstein testified that Husky's initial proposal to acquire the retail business through an asset purchase was unacceptable to the Mohawk board.
Oh.
More of that, it was
Inconceivable!
an asset-based transaction would have given rise to a significant tax liability, resulting in a significant corporate tax liability for Mohawk Canada, resulting in
Inconceivable!
the financial and tax model showed that with such a transaction structure, the shareholders of Mohawk Canada would end up with a net cash purchase price significantly below Mr. Sutherland's desired price of $7.25 per share, which would have been a Mr. Kopstein explained that Balaclava was unwilling to surrender part of his interest in Maha Canada for the residual assets that would lead to a capital gains tax. Since Balaclava was to receive a significantly less cash than the public and Mr. Sutherland, he was instructed to come up with a transaction structure which would allow Balaclava to defer its gain. Oh, that's it. The first part of the transaction structure, the initial transaction, called for Balaclava to sell its interest in Maha Canada for the consideration described in paragraph 24 of the agreed statement of fact, consisting of 9.5 million common share of HB acquisition, cash in the amount of $5 million, and a non-interest-bearing promissory note issued by HB acquisition in the amount of $5.9 million, the HB acquisition promissory note. The second leg of the transaction structure called for Balaclava or an authorized subsidiary of Balaclava to acquire Mohawk lubricants and the other residual assets for $15.5 million payable through the issue of two non-interest-bearing promissory notes in the amounts of $9.5 million, the first P note, and $5.9 million, the second P note, respectively payable in 25 years. This transaction step would be concluded only after the takeover bid was completed. The HB acquisition promissory note and the second promissory note would be offset and cancelled, leaving Balaclava with subsidiary holding 9.5 million common shares in HB acquisition and Mohawk Canada holding the first P note. To complete the transaction, Balaclava would exchange the common shares of HB acquisition for preferred shares of a Husky affiliate. While the preferred shares were retractable at the option of the holder, Husky could cause Balaclava, its subsidiary, to accept the first P note in full and final payment of the redemption price.
Okay. That's a lot.
That's a lot of things.
Yeah.
But basically, it's like you have two P notes and they cancel each other if ever you call them.
Yeah.
Mr. Kopstein testified that at that point, he believed that he had completed his main tax mandate. Under the initial transaction structure, Husky would have paid $103 million for all of the common shares interest in Baja Canada. Balaclava would own the residual assets as well as 9.5 million preferred shares in the Husky affiliate. The capital gain on Balaclava's interest in Baja Canada would be deferred until Balaclava asked for a retractation of the preferred shares, NHB acquisition, and Mohawk Canada could be amalgamated with Husky. While the sale of the residual assets to Balaclava would take place in a taxable transaction, Mr. Kopstein was told that Mohawk Canada would have a sufficient tax shelter to offset the gain. The initial transaction structure was reflected in the joint bid agreement signed between Husky and Balaclava, and in the purchase and sale agreement and the option and put agreement, both appended as scheduled to the joint bid agreement. The option and put agreement and the purchase and sale agreement were to be executed by Mohawk Canada after completion of its takeover, as the board was not responsible for overseeing potential post-closing transactions. These post-closing transactions would be approved by the new board of directors controlled by Husky Oil and Husky Oil and Balaclava provided in the joint bid agreement undertakings to give effect to each of the aforementioned agreements.
Okay.
So we're giving a promise to the board, like, hey, we're going to do these things. Yeah. Mr. McNair called Mr. Kopstein in the early July after the offering circular had been mailed to the Mohawk Canada shareholders to tell him that Mohawk Canada was more profitable than expected and that Mohawk Canada would incur tax liability on the sale of the residual assets. Mr. Kopstein testified that Mr. McNair was frustrated with the fact that Mohawk Canada was going to have to pay tax on the sale.
You know, it's ridiculous. It's like the guy calls him and says, hey, we got way more money than we expected, and, you know, we're going to have gain. Oh, no, that's terrible. More money, and we're going to have gain? That's awful. Who wants that?
I can play a little telephone game.
Okay, I'm ready. I get the flip phone. I'm ready.
Ding, ding, ding.
Hello?
Hi, look, I have a good and a bad news for you. Good news is, oh man, we're so profitable. We're making so much money.
Whoa. Wow, that's amazing. I love this news. I am so happy right now. What's the bad news?
Well, the bad news is since we're making money, well, you gotta pay tax.
What? That's outrageous! because I don't want to pay tax.
Would you rather make less money?
No, I want the money and not pay tax. Can you make that happen, please? Do it.
Yeah, sure. Do you have money for legal advice? I might come up with a plan. I'm not sure it's gonna work, but I have an idea.
I have money for legal advice to make the plan. Go make it.
Okay, thank you.
Bye-bye.
Call me back.
Dead. And scene.
So that's how it works.
Okay.
It's like I would rather give money to my legal advice team than to the government.
Yeah.
Okay.
Bad. Okay, we need to do more reenactments. I can't believe I got the flip phone for that. This was very pathetic. Just my little Samsung. Oh, thank you, Samsung.
Because you're the one on the road.
That's right. I'm a busy.
I mean, think about
executive.
1998. You have a flip phone. That's oof.
That's pretty good.
You're making a lot of money and paying a lot of taxes.
Was there flip phones in 1998?
Probably. I'm not sure. Maybe. I don't know.
I don't know. Maybe.
Well, you're so rich. Like you just got the new.
Yeah. I got the new car phone. I got the flip phone. I got them all. Yep. Definitely. Okay.
Mr. Kopstein worked with his corporate and securities partner to. That's actually what happened.
It is right. That's the work.
Oh wait, I was not done with this paragraph. Mr. Kopstein testified that Mr. McNair was frustrated with the fact that Mall Canada was going to pay tax on the sale, which was an outcome that Husky had not bargained for. Oh man.
Wow.
Mr. Kopstein suggested that Mr. McNair that the capital gain could be avoided by simply substituting preferred shares for the P-notes that Mall Canada was to receive under the initial transaction structure. However, Mr. Kopstein explained that he needed his client's approval to begin work on the revised plan. Mr. Kopstein called Mr. Powell of Balaclava, who approved the new initiative provided it would not prejudice Balaclava's positions. So that's really what happened. It was like, I didn't sign up for paying taxes. Make it work.
Make it go away.
Well, I have an idea, if we do this thing where it's like, yes, let's do this thing.
Let's do it. Whatever. I don't understand it. I don't care. Just do it.
Like, do it.
Make it happen.
Am I paying less tax? Well, if it works, actually, we could structure. Just say you're paying less tax. Okay, that's good.
Pretty much the size of it.
Mr. Kopstein worked with his corporate and securities partner to come up with the details of the revised plan. After completing their analysis of the tax, corporate, and securities law considerations, a revised structure was proposed. The revised structures under which Mohawk Lubricants, the owner of the residual assets, would amalgamate with 347, an indirect subsidiary of Balaclava. Mohawk Canada would receive preferred shares of Lubes Amalco, as described in paragraph 41 of the Statement of Agreed Facts. The revised structure called for the redemption of 7.3 million Class A preferred shares received by Mohawk Canada for a non-interest-bearing P-note in the amount of $7.3 million payable on June 1st, 2023. Following this redemption, Mohawk Canada was left holding 8.1 million preferred Class B preferred shares and 1 Class C preferred shares in Lubes Amalco. The revised structure was reflected in the amended option and put agreement executed after completion of the sale of Mohawk Canada and was fully implemented after the completion of the planned amalgamation.
Okay.
We get where it's going.
We're starting to get the size of it a little bit. Yeah.
Mr. McNair's testimony. Mr. McNair testified that he was part of the Husky team involved in the Mohawk Canada transaction.
Yeah.
His primary responsibility was
quarterbacking
the tax due diligence and reviewing the plans for the acquisition of Mohawk Canada and the disposition of the residual assets by this corporation. He was not involved in the preparation of the tax plan, as this was Mr. Kopstein's responsibility. Initially, his tax due diligence showed that Mohawk Canada would not be taxable on the sale of the residual assets in light of the information obtained from Mohawk Canada's tax advisors, Ernst & Young.
I'm so confused. I thought we had KPMG before, but now we got EY as well.
Yeah, but KPMG had another duty. It was some financial due diligence, whatever.
Yeah.
And now it's EY.
Okay.
Or as it used to be called, Ernst & Young. And now it's just EY.
Yeah.
They don't like us knowing what are the names behind the letters.
Got me. I don't know why.
Oh no, it's marketing teams.
Yeah.
By early June, the summarize of his memorandum of June 3rd, 1998, Mr. McNair had discovered that Mohawk Canada was more profitable than expected and would pay approximately $1.5 million in tax
Inconceivable!
as a result of the sale of the residual assets. He corroborated Mr. Kopstein's testimony on the circumstances leading to the revised structure. His understanding of the revised structure is that both Mohawk Canada and BAI would be able to defer tax until the preferred shares they hold or redeem. This event would likely occur only in 2023, which is the maximum default period built into the terms of conditions of the preferred shares. They were like, would you rather have $10 million now or in 20 years, 25 years? I really don't want to pay the tax. I'd rather have the money in 25 years.
Give it to me in 25 years? Come on.
Yeah.
Ridiculous. That's ridiculous.
Okay, Ms. Pereversov's evidence. Ms. Pereversov's?
Yeah.
Does that sound right? I don't know.
Paraversov.
Perversov.
I don't know how else you would say it. It's a long name.
Pereversov's. Testify. No, she's not here to tell me that it's not right, so I can say it the way I want.
Let's shorten her to PV.
PV?
Mrs. PV.
Mrs. PV.
Mrs. PV.
Testified that she was asked to review the Mohawk Canada's transaction by the CRE large case auditor assigned to the Husky audit. She found it peculiar.
Peculiar! Nice.
I mean, she did not find this.
Inconceivable!
It was just peculiar.
She found it peculiar.
That two unrelated parties could avoid capital gains tax by taking back similar preferred shares.
Yes.
I do find it peculiar
I
as
also
well.
find it peculiar, yes.
She concluded that the amalgamation violated the exception in subsection 87.4 of the Act, the 87.4 exception.
Okay.
The admissibility of her testimony was challenged by Mr. Crump, counsel for the appellant, on the grounds that she was not qualified to give an opinion on the fair market value of the shares of Mohawk Lubricants and Lubes Amalco. She acknowledged that she was not qualified to do so, but pointed out during her testimony that the value that she ascribed to the shares of Mohawk Lubricants was the value used by the parties to the transaction.
Yeah, honestly.
It's like you're certainly not
on.
qualified to say that the value we use, for which we had
Is
a guy that was
right.
very qualified,
Is
is
the
right.
value. Come on. Oh, my goodness.
You don't know the value.
Shady.
Our guy know the value, but he's not here. So you, Miss PV, certainly not qualified.
You don't know, Ms. PV.
Mr. Weaver's evidence.
Okay.
Mr. Weaver's.
So many testimonies.
Yeah,
It's amazing.
must have been a long.
Long trial, yeah.
Well, actually, we know the answer to this question because the appeal was heard September 29
2 days.
30,
It's
October
4 days.
1st and
4
2.
days.
4 days.
Yeah.
So
Yeah.
it seems reasonable.
Yeah.
It's quite a big case.
Yeah.
Mr. Weavers testified that he disagreed with Miss PV's basis for denying rollover treatment to Mohawk Canada for the purposes of subsection 87.4 of the Act. He believed that Miss PV had wrongly concluded that a benefit had been conferred on HB acquisition within the meaning of the 87.4 exception because she believed that HB acquisition had been relieved of an obligation to pay
Yeah.
cash for the share disposed of by BAI.
Yeah.
Apparently, she wrote this in a letter that that was not provided in evidence. Mr. Weavers believed that rollover treatment should be denied on the grounds that Mohawk Canada received non-share consideration on the amalgamation. Mr. Weavers had difficulty explaining his position on the issue during his cross-examination.
Oh.
He finally agreed that the non-share consideration that he identified when he reviewed the file was BAI's agreement to accept common shares of HB acquisition, which were subsequently exchanged by BAI for preferred shares of HMLT.
Okay.
Mr. Weaver's decision to add subsection 56.2 and 69.4 as alternative grounds for his confirmation of the reassessment was made because he had received directions from a CRA department in Ottawa to do so.
Oh, this is not sounding good for the crown
This is
here.
kind of weird.
Yeah.
But also, I'm just thinking, like, something is wrong, clearly.
Yeah.
But the question is, under what provision is this wrong?
Right. Well, let's find
It's
out. I hope that
Like, right
Justice
from the
Hogan's
bat.
going to tell us.
I don't know. Like, you give me this and you're like, it's wrong because of what? I would be like,
Well, I think that you have non-share consideration being hidden in all these P-note transactions. Like, I think that's what's going on.
yeah, but I mean, what part of the transaction doesn't work?
Yeah, it's a good question. Well, let's go. I mean, let's see. I suspect if we spent the hours it took to figure this out, we could figure it out. But hopefully, Justice Hogan has done it. Let's find out.
Oh, that's
Let's find out. Let's see.
issues to be decided by the court.
All right, we're on to issues.
The-
Okay, it took us 30 paragraphs of facts.
Yep. To finally, like, half the decision is just facts.
Just facts. Yeah.
The issues for determination is this appeal were framed by the pleadings as follows. Whether the FMV of the shares of Lubes Amalco received by Mohawk Canada and the amalgamation of Mohawk Lubricants in 347 was less than the FMV of the Mohawk Lubricants shares prior to their disposal by Mohawk Canada, and whether it is reasonable to regard all of or a part of the excess as a benefit which Mohawk Canada wished conferred on HB acquisition, so that the exception in subsection 87.4 of the Act applies to denial over treatment.
Okay.
Whether Mohawk Canada received non-share consideration for its disposition of its shares at Mohawk Lubricants and the amalgamation of Mohawk Lubricant in 347, so that the rollover provision in subsection 87.4 of the Act does not apply. Whether property owned by Mohawk Canada represented by its shares of Mohawk Lubricants was appropriated for the benefit of HB acquisition, with Mohawk Canada receiving consideration of the form of preferred shares of Lubes Amalco, having an FMV less than the shares of Mohawk Lubricants, so as to engage the provisions of section 69.4 of the Act, and 4. Whether Mohawk Canada intended to confer benefit to HB acquisition when Bai's share of Mohawk Canada were transferred to HB acquisition, so as to engage the provisions of subsection 56.2 of the Act.
Okay.
Okay.
I'm starting to. I think I'm seeing it. So I'm hoping he's gonna give us the.
Yeah.
He's gonna tell us. But I think I see where we're going here. Yeah.
I think what I see is that, you did this tax-free transaction, but doing so, you gave like a benefit
Yeah.
to the other party,
Yeah.
which I think is usually a problem.
Yeah. A shareholder benefit.
Yeah.
Right?
Well,
Yep.
well,
But
it's
they're not talking about Section 15, so
No.
it's not shareholder benefit. It's
No, it's
related party benefit.
Yeah, amalgamation
amalgamation.
benefit.
So there's an exception in the amalgamation statute where you have a benefit going to one of the amalgamating parties, right? You can't be having that
Yeah.
go on a tax-free basis if it releases value.
that's
into
like
the
a, that's
wild.
like a rollover, basically.
Yeah, yeah, yeah.
85.
Yeah. All right, so let's see.
Okay, appellant's position. We're going to see what the appellant has to say. The appellant objects to this testimony of both Mr. Weavers and Miss BV on the grounds that their testimony was inadmissible because both witnesses were being asked to provide expert valuation evidence on the fair market value of the shares of Mohawk Canada and Lubes Amalco. The appellant also agrees that Mr. Weavers and Miss BV were being asked to provide lay opinions on the application of the law to the facts therein, a matter that should be dealt with only in argument and ruled only by me in my judgment. Lastly,
Okay.
the objection was raised that the witness's testimony violated the parole evidence rule
Whoa.
insofar as their evidence constituted an invitation to the court to conclude that Mohawk Canada and Balaclava made mutual promises to exchange worthless shares for the benefit of being able to defer their respective taxable gains for 25 years. Mr. Crump argues that the agreements that give effect to the transactions were unambiguous, and the parole evidence rule bars the witnesses from inferring that so-called mutual promises existed.
Well,
Okay.
you recall the parole evidence rule is the rule that if you have a contract, it has to. You can't say that. Oh, and we have the side agreement
Yeah.
that we made orally. So why? The agreements give effect. Okay. Parole evidence rule bars the witnesses from inferring that so-called mutual promises existed. Oh, I see. Okay. Interesting. Okay.
87.4 exception. Mr. Crump submits that in order for me to find that the 87.4 exception applies to the facts herein, I must conclude that all of the following conditions have been met, which the appellant disputes. A, the fair market value of Mohawk Canada shares in Mohawk lubricants exceeded the fair
Yeah.
market value of Mohawk Canada shares in Lubes Amalco. On this point, the appellant argues that the evidence of Mr. Lindsay in examination in chief and in cross-examination is sufficient to make out a prima facie case that the respondent's assumption that the shares of Lubes Amalco were worth less than 15.5 million is wrong. As the respondent failed to call an expert witness, I must conclude, according to Mr. Crum, that the respondent has failed to make its case on this point.
Okay.
Okay, so he's saying in order to have an argumentable valuation, you had to bring a valuation expert,
Yep.
which seems like a good argument.
I mean, this whole time there's been this argument that when lubricants amalgamates with 347, somehow the product of their amalgamation is worth less than
Yeah.
lubricants was before the amalgamation. Seems like you need somebody to be explaining that, and if they just claimed it but didn't explain it, then I can understand why Justice Hogan wouldn't agree with that. Okay.
And B, it is reasonable to conclude that Mohawk Canada intended to confer a benefit on HB acquisition as alleged by the respondent in his pleadings. On this point, counsel argues that Ms. PV identified the benefit as the removal of HB acquisition's obligation to pay by $7.25 in cash per share. Ms. PV's analysis on this point is contradicted, says counsel, by documentary evidence that clearly establishes that no such obligation existed. See? Mohawk Canada was related to HB acquisition at the time that the benefit was conferred. The apparent submission at this point is that the benefit was conferred when Mohawk Canada signed the support agreement on June 1st, 1998, as that agreement set in motion the transaction which gave rise to the amalgamation. At that time, HB acquisition and Mohawk Canada were not related. Only share consideration was received.
I don't like this heading. Like what? What is this
What?
heading?
I think these are all the arguments, but yeah.
Oh,
okay.
evidentiary exceptions? Okay, maybe. All right. So this is the second.
That's like another argument. The
Okay.
appellant submits that the respondent's allegation that non-share consideration was received by Mohawk Canada on the amalgamation is summarized in the read-in from the appellant's examination for discovery of Mr. Weavers as follows. The non-share consideration received by Mohawk Canada Limited in the course of disposing of Mohawk Lubricants Limited shares was Bell Acquisition Inc.'s promise to accept 9.5 million common shares and a promissory note bearing at face value of $5.9 million from HB Acquisition Inc. in the course of Bell Acquisition Inc.'s disposition of Mohawk Canada's SIC Limited shares.
There's no such thing as limited shares, so I think they mean common shares, or they mean preferred. I don't know. They mean the preferred shares. Probably.
They mean Mohawk Canada Limited shares.
Oh.
Like the apostrophe
Oh,
S
yeah.
is not
Okay.
at the right place.
Yeah. Okay. Good.
Which
Good.
is kind of funny because now they are limited shares.
Exactly.
And I mean, if you go in my class, you will know that limited shares doesn't exist.
I don't know what that is.
Or,
So
I don't know. Maybe they do exist. But
I mean, maybe a preferred share could be a limited share.
well, actually, I mean, you could call like anything you want in your article of incorporation.
I mean, yeah, you can call it unicorn shares.
Zebra shares,
Absolutely.
unicorn shares,
You can. Yeah. Yeah.
and well, it'd probably be quite successful. Like, I own unicorn shares. I
Very
think-
marketable. That was
Yeah.
their problem. That's why they had thinly capitalized. Well, you just have to call it the right thing.
Yeah. Well, I think I should
Marketing.
start a business.
Okay.
Go to the stock market on the public, on the TSX or whatever.
Yeah.
And I will call them unicorn shares.
Let's see how
of
it
my
goes.
company.
I'm with you. I'll buy it.
I'll
buy a share.
buy some.
Okay.
And it's better than some meme coins. Now we're gonna have meme shares.
Fair enough. True.
Meme shares. Well, that's a new thing. I mean, are you losing all your money in meme coins? Did you think about losing even more in meme shares? Now introducing unicorn shares.
Can you imagine? Oh man.
Someone's gonna watch this and they're gonna do it.
And then make $1 bazillion, and it'll be your fault.
It's gonna be my fault.
It's not my fault. I didn't bring it up.
And my company is gonna make like, I don't know, NFTs.
Yeah, NFT. Sure.
But you're not gonna own the NFT. You're gonna own a unicorn share
Right, share. A limited unicorn share
in the company that owns the NFT.
Yeah, I got you. I understand.
Oh, it's gonna be popular. I'm gonna get so rich. I'm gonna give all my money to the CCTP.
Sure, why not? That'd be good.
Yeah, so we're gonna get funded by unicorn shares. Ooh, that's a long judgment.
All right. Want me to read a bit? No, you finish this part and I'll read some in the next part.
Awesome, thank you. Furthermore, Mr. Crumb points out that Mr. Weavers admitted in cross-examination that non-share consideration identified by him was provided for under an agreement that took effect on July 7, 1988, pursuant to which Buy transferred shares in Mohawk Canada to HB Acquisition. The agreement predates the execution of the amalgamation on July 8, which took effect on August 1st. Counsel argues that Mohawk Canada received only shares in Lubes Amalco on August 1st and that past consideration, if any exists, cannot be considered to be consideration received on the amalgamation. Moreover, Mr. Crumb further submits that the plain words of subsection 87.4 require that the non-share consideration be received from the corporation resulting from the amalgamation and not from a third party.
No appropriation under subsection 69.4. The appellant argues that subsection 69.4 does not apply to the facts herein because the respondent failed to identify the appropriator in its pleadings, and Ms. Peavy wrongly concluded that the benefit received by HB Acquisition was the removal of an obligation to pay by $7.25 in cash for each of its shares in Mohawk Canada. Subsection 56.2 not applicable. Counsel points out that the minister failed, for the reasons mentioned earlier, to establish that HB Acquisition received benefit. A benefit is an essential condition for the application of subsection 56.2. Respondent's position. Evidentiary objections. Mr. Gibson, counsel for the respondent, rejects the appellant's argument that the testimony of Ms. Peavy and Mr. Weavers is inadmissible. These witnesses were called to explain why the CRA denied tax-free rollover treatment and reassessed Husky in respect of the disposition by Mohawk Canada of shares in Mohawk Lubricants. Counsel also argues that the parole evidence rule does not apply to third parties, such as the respondent, who are not parties to the documents signed by the parties to the transaction. What the parole evidence rule is designed to do is stop one party to a contract. That's right, I knew this. Stop one party to a contract in written form from introducing evidence other than the written contract that is inconsistent with the wording of that written contract. 87.4 exception. Mr. Gibson argues that the only way the appellant could rebut a technical assumption as to the fair market value of the shares of Mohawk Lubricants and Lubes Amalco was to call a recognized expert, there you go, in the valuation field, just as you said. The appellant's witnesses were not qualified to provide expert testimony in much the same way that the respondent's witnesses were not qualified to do so. Therefore, the minister's assumption as to the fair market value of the shares made in the pleadings must stand. Secondly, Mr. Gibson argues that Ms. Peavy used the value agreed to by the parties for the Mohawk Lubricants shares as evidenced by the reference in the offering circular to the fact that the residual assets were to be purchased for $15.5 million. Mr. Gibson also takes issue with the allegation that Ms. Peavy concluded that the benefit conferred on HB Acquisition was the removal of its obligation to pay $7.50 per share. Ms. Peavy did not testify on this point in her examination in chief. In addition, counsel for the respondent did not cross-examine her on the point. All that counsel for the respondent did was read an excerpt from Mr. Weaver's examination for discovery that established what Mr. Weaver's believed Ms. Peavy had identified as being the benefit for the purposes of the 87.4 exception. Mr. Weaver's concluded that Mohawk Canada could be reassessed on a different basis. He believed that Mohawk Canada received non-share consideration for the shares it gave up in Mohawk Lubricants. Okay, let's talk about that non-share consideration. Mr. Gibson argues that there were mutual promises given to Buy on the one hand and Mohawk Canada on the other to exchange shares for worthless shares, and that these mutual promises constitute non-share consideration received by Mohawk Canada on the amalgamation of Mohawk Lubricants. Subsection 69.4. Mr. Gibson submits that Husky, through its control of HB Acquisition, caused HB Acquisition to direct Mohawk Canada to enter into the amalgamation in order to fulfill a promise made to Balaclava that it would end up owning the residual assets when the transactions were finally completed. He argues that there was nothing for Mohawk Canada in the amalgamation. It gave up shares in Mohawk Lubricants worth $15.5 million for preferred shares in Lubes Amalco that were worthless. This constituted an appropriation by HB Acquisition, or Husky Oil for that matter, of property belonging to a subsidiary in much the same way that the appellant in Boardman v.R. 1985 appropriated property, although the property was not transferred to him. I don't know that case, so I'll leave it there. Subsection 56.2. The Crown argues that the actions that trigger the application of subsection 69(4) of the Act are the same actions that trigger the application of subsection 56(2). Okay, so we've got all the arguments, and now we're on to analysis.
Analysis. Finally.
Yes.
What I was waiting for. An hour and 50 minutes.
A long
now.
time, yeah. 20 pages of facts and parties' positions. Yeah.
Well, it's better than the next Husky, which has like 200 pages.
Oh, yeah, I'm going to say that there is a commitment when you start reading those things. You can't just sit down and be like, should we read a case? Why not? No, you have to be like, okay, we're going to be on here for 4 hours, and we need to stay hydrated.
Well, more than that.
Yeah.
I think if ever we read the first Husky, like the Husky Energy,
Yeah.
the tax court, it's going to be like a full day.
It's a long decision.
Or a full night. We just do like streaming, full night, reading decision.
Some people stream for hours a day, but they usually do something other than read a complex tax case, yes.
Well, it's... I think it was going to be a good way to market our unicorn shares. Well, I think the NFT could be the reading of the case. Can we make it into an NFT?
I don't see why not. I think
We're
if you
gonna
can
sell
think of
it
it, you can
for,
do it. Yeah, yeah.
For $1 billion?
Sure.
And then the series is going to assess us on the
Probably.
basis that
Yes.
it's not capital gain, but it's a business.
Probably.
Back to serious stuff.
Reset.
Analysis. Evidentiary objection. I allowed Ms. PV and Mr. Weavers to testify subject to the reservation that I would rule on the admissibility of their testimony, and on the weight, if any, I should give to it prior to dealing with the substantive matters at issue. On cross-examination, both witnesses admitted that they were unqualified to give expert opinion on the fair market value of the shares of Mohawk Lubricants and Lubes Amalco. However, this does not mean that I must discard all of their testimony. Ms. PV testified that she believed that the shares of Mohawk Lubricants were worth $15.5 million based on the value used in the transaction documents by the parties. She also testified that she assumed that the preferred shares taken by Mohawk Canada in Lubes Amalco were worthless in view of the terms and conditions of the shares. In addition, Ms. PV believed that Mohawk Canada intended to confer a benefit on HB acquisition in accepting the worthless shares. These findings are the assumed fact that are listed in subparagraph 17 BBB, CCC, and DDD of the respondent's reply to the notice of appeal. These were the facts that prompted Ms. PV to issue the reassessment on the basis that the amalgamation violated the 87.4 exception. I admit the witness's testimony for the purpose only of establishing the fact that the appellant has the initial burden of demolishing by presenting a prima facie case to the contrary. I also find that Mr. Weavers, in confirming the reassessment, believed that Mohawk Canada received non-share consideration for the disposition of its interest in Mohawk Lubricants, and that property of Mohawk Canada, being the shares in Mohawk Lubricants, was appropriated for the benefit of HB acquisition. I do not agree with Mr. Crum that the parole evidence rule prohibits the respondent from alleging that Balaclava and Husky entered into mutual promises to transfer property for shares of much less value as a scheme to avoid capital gains tax. Mr. Justice Hugusen,
Sure.
This guy, writing for the Federal Court of Appeal in Urichuk versus Canada, dismisses the application of this rule as follows. We also reject the appellant's attempt to invoke the parole evidence rule to object to evidence of the circumstances leading up to the making of the agreement. The minister, not being a party to that agreement, is entitled to rely on any available evidence to support his characterization of the payments in a manner different from that employed by the former spouses in the agreement itself. In our view, the trial judge correctly examined the agreement and all its surrounding circumstances and applied thereto the proper criteria. Emphasis added. Mr. Crump argues that the onus of proof as regards to the question of the value of the shares had shifted to the respondent. He bases this on the testimony of Mr. Lindsay and his analysis of the Supreme Court of Canada decisions Ooh, that's a banger. Hickman Motors Limited versus Canada.
Oh,
Hickman Motors.
yeah.
What exactly did Mr. Lindsay say during his examination in chief and on cross-examination? Mr. Lindsay said that Husky initially was interested only in Mohawk Canada's retail assets.
Right.
I'm just saying that there's going to be a little play that we're going to have
Ooh,
to do.
okay, we're going to do it.
I'm getting excited now.
Okay, good. Good. I'm ready.
Mr. Lindsay said that the Husky initially was interested only in the retail asset, but Balaclava had identified 5 assets that Husky wasn't willing to take. Mr. Sutherland for the sport was interested in an all-cash bid. After extensive negotiations, Husky agreed to take 2 of the residual assets, namely the Minnedosa ethanol plant and a life insurance policy, and increase its initial offer from $90 million to $103 million. Following the amalgamation of Mohawk Lubricants, Balaclava would end up owning the residual assets consisting of the Poundmaker shares, the jade inventory, and the oil refinery in British Columbia. On cross-examination, Mr. Lindsay testified as follows.
Question, Mr. Gibson. So the figure of $15.5 million that we've heard about and that you were asked about by Justice Hogan earlier, how did that figure come about?
Which 15.5 number are you talking about?
15.5. The value of residual assets, portion of the residual assets.
Is that all the residual assets? The number would be a lot bigger than that.
Justice Hogan. I said it was 103 plus 15.5 was the residual that you took minus debt, and that you that gives you a full share value because in the 103 Husky was picking up the other regulations. The other residuals.
Yeah, it already picked up Minnedosa. That was the second most valuable asset after...
Plus the insurance policy.
Yeah, I mean, that number, you know...
Question. Mr. Gibson, the Crown thinks that Mohawk Lubes was worth $15.5 million.
I'm not sure if that's correct, or if that included Jane and the pound that maker.
The pounder maker. Okay.
Okay, let's I'm not done. I'm sorry.
Oh.
Are you sure of that? Someone would have to show me the breakdown. I believe, and I stand to be corrected, would it not be more like 13 million and 2.5 million?
Justice Hogan here. 15.5 was for all the residual that they bought.
All 3 of them. Well, you know, I believe the number was something like 13, 2.2, and $1 million or something. You know, to get to 15.5, I'm somewhat guessing from a collection on that make of 15.5.
I'm so confused by this testimony.
That's so bad.
Wow. Okay. Okay.
Okay, it's not
Very confusing.
That's like, I don't really want to give an answer.
No, you are being evasive.
Yeah. I'm like, what's
Mr. Gibson.
15.5? I think it's more like, 12 plus 3.5 or 13 plus 2.5, something like that.
Yeah.
But it's not 15.5.
No. 13, 2.2. There's 0.3 missing.
Also, did you include the pound maker?
Oh dear. Okay.
It's like the guy thing that it's like an object, like it's a pound maker.
It's a pound. Like it's like a yeah.
Actually, don't remember what is the thing. It's the pound maker.
It is the pound maker, and it's an integrated feedlot ethanol facility.
Oh, there's even a virtual tour.
I don't see how these go together. Yeah, we're gonna have to do a tour of this thing, but let's try to finish this judgment first.
Yes. Okay, let's go back.
Okay.
Where's mine?
There you go.
As Mohawk Lubricants owned all of the residual assets acquired indirectly by at the time of the Mohawk Lubricants amalgamation, the value of its shares would be $15.5 million based off Mr. Lindsay's recollection. It would be hard for Mr. Lindsay to recollect otherwise. In the offer to purchase mailed to the Mohawk Canada shareholders, the party declared that shares of Mohawk Lubricants are to be acquired for a purchase price of $15.5 million as follows.
Yeah.
Option agreement. Under the option agreement, buy would be given an option. The option to purchase all of the issued and standing shares of lubricants. The lubricant shares by or any other affiliates or associates would be entitled to exercise the option at any time during a 20-day period. The option period following the date of the option agreement. Mohawk will have the right at any time with the option period to require to exercise of the option by buy. If the option is exercised, the purchase price for the lubricant shares would be $15.5 million, subject to a working capital adjustment. The purchase price for the lubricant shares will be evidenced by the issuance of the purchase and promissory note, and buy will be required to surrender his common shares of the offer in exchange for involving shares of the offer.
Okay. I mean, it's 15.5. Like, I don't know why we're arguing about this. It's so dumb.
15.5 of what?
Of millions of dollars. That's how much. That's of what? It's $15.5 million. Period. End of story.
The guy is like, what? 15.5? My recollection was 13 plus 2.5.
What are you talking about? 15.5. Oh, man.
Mr. Crumb presents a novel argument. He submits that a reasonable person, apprised of the fact that the amended option and put agreement had been entered into, would reduce the value of the Mohawk Lubricant shares to nil. I do not accept. What?
Okay.
I do not accept this argument. Mohawk Canada is a shareholder of Mohawk Lubricants. The fact that it has entered into the amended option and put agreement does not affect the value of the shares of his subsidiary, Mohawk Lubricants. Mohawk Canada could be compelled to give effect to the agreement or face a lawsuit for damages, both being actions that can be directed against it and not by its subsidiary, Mohawk Lubricants. I know that the amended option and put agreement may affect the value of Mohawk Canada's shares, as it is giving up Mohawk Lubricants, worth $15.5 million, according to the respondent, to accept shares of Lubes Amalco, which the respondent says are worthless. It does not, however, affect the value of the Mohawk Lubricants. If I were to accept Mr. Crumb's submission at this point, bona fide estate freezes would no longer need to be implemented with the protection of valid price adjustment clauses. For example, based on this argument, a father could cause his holding corporation to grant a long-term option, for example, to his son to purchase assets from the corporation at their current price or a lower price. On his death, the father's estate could claim that the holding corporation's value is impaired because of the option, thus avoiding for both the shareholder and the entity tax on shares that have since increased in value.
Wow.
That's a very good example.
Very astute, yes.
After review of the evidentiary objections raised by the appellant, I concluded the minister's assumption that the shares of Mohawk Lubricants are worth $15.5 million must stand. Equally, the appellant has failed to make a prima facie case rebutting the minister's assumption that the preferred shares of Lubes Amalco were worthless. To rebut this assumption, the appellant will have had to call an expert witness to provide the court with an opinion on the fair market value of the Lubes Amalco preferred shares.
Okay,
so that's like, oh, you tried to make this argument, now we're making it against you.
Yeah.
And you're losing both.
Mm-hmm.
Too bad.
Yeah.
Analysis of the substantive issues. Okay, finally some substance after 54 paragraphs.
Really a lot.
87.4 exception. Rollover treatment may be disallowed under the 87.4 exception, which reads as follows.
Okay, finally we're going to get this exception.
Finally we're going to know what this... Except that, where the fair market value of the old shares immediately before the amalgamation exceeds the fair market value of the new shares immediately after the amalgamation, and it is reasonable to regard any portion of the excess in this subsection referred to as the gift portion.
There you go.
Oh, that's why they're calling it a gift.
Yep.
As a benefit that the shareholder desired to have conferred on the person related to the shareholder, the following rules apply.
Okay.
So if you have a disconnect between the value before and after, and the disconnect is before you gave a gift, then you have a problem.
Yeah.
When this exception applies, the shareholder of the predecessor corporation is deemed to have disposed of the shares, the whole shares of the predecessor corporation.
So Mohawk is deemed to have disposed of the shares of lubricants
for an amount equal to the lesser of I, the total of the adjusted cost base of the old shares and the gift portion. Define that subsection as the amount by which the value of the old shares exceed the value of the new shares, and 2, the fair market value of the old shares immediately before the amalgamation. In order for the 87.4 exception to apply in this instant case, I must find that all of the following conditions are met. The FMV of Mohawk Canada shares of Mohawk Lubricants exceeded the FMV of Mohawk Canada shares in Lubes and Malco. It is reasonable to regard any portion of the excess as a benefit that Mohawk Canada desired to confer on HB acquisition, and C. Mohawk Canada was related to HB acquisition at the time of the benefit was conferred.
Okay.
And that's a very good example of when you have criteria to change corporation, other corporation with the actual
name, the proper name, so you can keep track of what's going on there.
I think it was very much easier to read it that way. So thank you, Justice.
That's good writing, yeah.
The preferred shares held by Mohawk Canada and Lubes Amalco give no dividend entitlement. The redemption price of the shares can be paid by Lubes Amalco through the issuance of a non-interest-bearing P note maturing on June 1st, 2023. It is incontrovertible. Incontrovertible.
Meaning you can't argue with this.
So that's even more inconceivable.
Yes, it's inconceivable to argue against.
It is
Inconceivable!
that an arm's length purchaser of the preferred shares would place a significant discount on the principal amount of the note. The appellant failed to lead evidence on that point. As a result, the minister's assumption that the Lubes Amalco preferred shares had a nil value must stand. I agree. That's good.
Okay.
Why did Mohawk Canada agree to accept the preferred shares in Lubes Amalco in exchange for the shares it gave up in Mohawk Lubricants? The short answer is that Mohawk Canada had no independent say in the matter. The evidence shows that Husky wanted the retail business. It was unwilling to purchase the residual assets. Balaclava wanted to liquidate its position in Mohawk Canada and was willing to accept the residual assets in lieu of an additional cash payment of $15.5 million, provided that the residual assets could be acquired on a pre-tax basis. Mohawk Canada was compelled to give effect to the amalgamation exchange of shares in Mohawk Lubricants for the preferred shares in Lubes Amalco, because the amalgamation was the means by which the residual assets could be transferred to Balaclava, supposedly on a tax-free basis. The amalgamation was a condition sine qua non that paved the way for HMLT's and Husky's acquisitions of Mohawk Canada. Both of these entities gave undertakings to Balaclava that they would cause Mohawk Lubricants to amalgamate with 347, and Mohawk Canada gave effect to this promise for the benefit of HB acquisition and Husky. In my opinion, the 87.4 exception is designed to prevent this very result by providing the shareholder of a predecessor corporation must act in its own interest and not for the benefit of related parties, such as a controlling shareholder.
Yeah, good. Yeah.
It should also be noted that the amalgamation benefited HB Acquisition and Husky in another way. Under the amended option and put agreement, HB Acquisition could have compelled to acquire the securities it issued to buy for $15.5 million if the residual assets were not transferred to Balaclava through the completion of the amalgamation on or before September 29, 1988. HB Acquisition's obligation to pay this amount was supported by a guarantee given by Husky. Both of these contingent obligations were terminated on completion of the amalgamation. Following the amalgamation, BUY was compelled to exchange common shares of HB Acquisition for preferred shares in HMLT, which have terms and conditions similar to securities held by Husky and Lubes Amalco. I infer from the fact that BUY exchanged the shares in HB Acquisition for preferred shares in HMLT that provided no annual return to it, that it was satisfied that it had received the $15.5 million in value attributable to the residual assets through the completion of the amalgamation. Mr. Crump argues that Mr. Weavers failed to properly identify the benefit required to trigger the application of the 87.4 exception. He makes his point in a roundabout way by referring me to Mr. Weavers' testimony on discovery. Mr. Weavers testified that Ms. PV invoked the 87.4 exception because she had already concluded that the HB acquisition was relieved from paying the $750 per share in cash only with respect to the share disposed of by BUY in favor of HB acquisition. The evidence showed that HB acquisition did not have an immediate obligation to make an additional $15.5 million cash payment to BUY. This obligation would rise only if HB acquisition failed to cause Mohawk Canada to complete the amalgamation on or before September 29, 1988. I am not sure whether Ms. PV grasps this distinction. The question was not put to her when she testified. In any event, when Ms. PV believed it is not important, as my review of the evidence has led me to conclude that Mohawk Canada gave up shares worth $15.4 million for worthless preferred shares because its shareholders, HB Acquisition and Husky, agreed to these terms as part of the bargain with Balaclava. As a result, a benefit was conferred on HB Acquisition and indirectly on Husky. That being said, there is nothing offensive, in my view, about the parties ending up with cross-shareholdings allowing a potential 25-year deferral of capital gains tax. Mohawk Canada, however, could not benefit from a rollover under subsection 87.4 because it ran afoul of the 87.4 exception.
Okay, so he doesn't think it's dodgy, but on the other hand, he's saying you just don't fit in the statute.
Yeah. You're just saying it's not dodgy. You're allowed to do this,
Sure.
but then you cannot get the exception.
Yeah. Yeah.
Sure.
Yeah.
Makes sense.
I mean,
Nicely written.
yeah.
I really like this paragraph. Like I like that he's saying, what you did is not wrong.
Yeah. I'm not passing moral judgment. I'm just
No.
telling you the words of the statute are,
You're just not following 87.4.
yeah.
That's fine.
Nobody said you had to.
Yeah.
Yeah.
I suspect that Mr. Kopstein faced a significant quandary in designing the terms and conditions of the preferred shares issued by Luz Amalco to Mohawk Canada. His client Balaklava had instructed him that it was preferred to accommodate Husky's desire that Mohawk Canada not pay taxes in connection with the disposition of the original assets, provided Balaklava's commercial objective were not prejudiced thereby. To make the tax plan more robust from a rollover standpoint, the preferred shares could have been made retractable for fair market value consideration. An annual dividend entitlement could have been added to the shares. These features would have been consistent with what the CRA generally demands in the case of an estate freeze. I assume that the former feature was inconsistent with Balaklava's desire to benefit from a 25-year deferral. If the Lubes Amalco shares had been redeemable for FMV consideration, Husky could have demanded the immediate redemption of these shares. This meant that BUY would have been compelled to do the same for its shares in HMLT. Otherwise, it would assume the risk associated with a continued investment in HMLT, while at the same time having no return of its investment. I assume that this consideration prompted Mr. Kopstein to design the terms and conditions of the Lubes Amalco preferred shares so as to ensure that Husky would retain its investment for as long as BUY desired to benefit from rollover. I infer from the evidence that this was achieved by providing that the redemption price would be paid through the issuance of a non-interest-bearing note maturing in June 2023. I suspect that the annual dividend feature was also rejected because Lubes Amalco would incur a port 6.1 tax if it paid a dividend to Husky. HMLT would incur the same.
Refundable tax?
That's the preferred share tax. When you have
Yeah.
HMLT would incur the same tax when it paid the matching dividend back to BUY. It seems that Balaklava's legitimate commercial consideration prevailed over Husky's desire for a tax rollover. This is an understandable result in the circumstances. The appellant argues that the word reasonable to regard used in the 87.4 exception required an objective review of the evidence. I agree with this proposition, and I believe that this is what I have done. However, I do not agree with Mr. Crumb's second proposition that I must consider the overall impact of all of the transactions entered into by the parties. It is what Mr. Crumb is inviting me to do in arguing that Mr. Lindsay testified that from an overall standpoint, each party ultimately ended up owning what that party bargained for.
Sure, that's true, but
Yeah, okay. The 87.4 exception is designed to prevent related parties from shifting equity values around, much as paragraph 87A51E.3 does in the case of a rollover of property for shares in subsections 86.2 and 51.2 do in the case of an exchange of securities of an issuer for the new shares of the same issuer. Without these provisions, it would be easy for related parties to avoid personal tax or corporate tax by directing the shareholder of an amalgamating company to take back securities of lesser value. A butterfly transaction structured to comply with subsection 55.2 or a bump transaction structured to comply with paragraph 88.1c can lead to the avoidance of tax by the corporate entity, but neither of these provisions could have been made to work in the case at bar. In my opinion, the 87.4 exception must be tested solely at the level of Mohawk Canada and not by reference to the overall result of all of the transaction as suggested by Mr. Crum. The words of the 87.4 exception limited one in defining the benefit conferred to a search conducted at the level of the disposing shareholder. That is clear from the reference that provision to the FMV of the shares before and after the amalgamation. The last point to the appellant's argument is that the benefit arose as a result of agreements entered into at a time when HB Acquisition and the Husky, for that matter, and Mohawk Canada were not related. Therefore, the 87.4 exception cannot apply. I find nothing in the agreement that supports this view. The joint bid agreement was entered into by Husky and Balaklava. The option and put agreement is attached as scheduled to the joint bid agreement. Husky and Balaklava were committed to execute the option and put agreement after the takeover closed. Mohawk Canada, being the object of the joint bid agreement, was not obliged to give effect to the option and put agreement. Mohawk Canada did sign the support agreement, but there is nothing in that agreement that deals with the transfer of the residual assets to Balaclava. The board of Mohawk Canada could not agree to the transfer of the residual assets without knowing whether its shareholder would agree to tender their shares pursuant to HB Acquisition's offer. The amended option and put agreement was executed by the new board after the takeover transaction closed and at a time when HB Acquisition, Husky, and Mohawk Canada were related. This is consistent with what happens after a takeover is completed. A new board is appointed to allow the new owners of the corporations to implement their plans for the target entity, including post-closing reorganizations. Therefore, I conclude that the 87.4 exception applies to the disposition by Mohawk Canada of its shares of Mohawk lubricants that occurred on amalgamation.
Okay, do you want me to read this one?
Sure, thank you.
Non-share consideration. As noted earlier, Mr. Weavers took issue with the basis on which Ms. PV concluded that the 87.4 exception applied, so as to deny rollover treatment. He recommended an alternative basis for the reassessment under subsection 87.4 of the Act. Mr. Weavers concluded that Mohawk Canada received non-share consideration, which violated the prohibition in the preamble to that subsection. Subsection 87.4 also denies rollover treatment if the shareholder of the predecessor corporation receives non-share consideration for the shares of the predecessor corporation. I disagree with Mr. Weaver's analysis. Mohawk Canada received only preferred shares of Lubes Amalco on the amalgamation. Balaclava received more than the securities of HB Acquisition when it agreed to transfer to that entity the shares of Mohawk Canada. Balaclava got an undertaking by Husky and HB Acquisition to cause Mohawk Canada to complete the amalgamation. This may be consideration to Balaclava. It is not, however, consideration received by Mohawk Canada. Mohawk Canada simply gave effect to the amalgamation. This freed HB Acquisition from the risk of having to pay cash to buy for the securities that it held in HB Acquisition and released Husky from its guarantee of this obligation. The amalgamation also removed the risk for both parties of a claim by buy for damages if the amalgamation was not completed as agreed. Subsection 69.4. The respondent also argues that the amalgamation gives rise to the application of subsection 69.4 of the Act. That subsection reads as follows. Shareholder appropriations. There it is. Yeah. Where at any time property of a corporation has been appropriated in any manner whatever to or for the benefit of a shareholder of the corporation for no consideration or for consideration that is less than the property's fair market value, and a sale of the property at its fair market value would have increased the corporation's income or reduced the loss of the corporation shall be deemed to have disposed of the property and to have received proceeds of disposition, therefore equal to its fair market value at that time. Emphasis added. This provision is much broader than the 87.4 exception. Property can be appropriated in many ways outside the case of a rollover. For example, a shareholder could cause property of a corporation to be transferred to it for consideration less than fair market value. A controlling shareholder could cause a corporation to transfer property to someone else to relieve that corporation of an obligation, or in this case to free HB Acquisition or Husky for that matter from the risk of having to pay cash to buy for the securities issued by HB Acquisition. The transactions carried out by Husky, HB Acquisition, Balaclava, and by, in the present case, are a more sophisticated version of the following basic plan presented here to illustrate the application of subsection 69.4. I am starting to understand why people love Hogan so much.
Yeah. He's like teaching us.
Yeah, he's teaching, yeah. Okay, so A, seller A owns a subcorp, Target Corp, that it wants to sell. Purchaser B wants to acquire the Target Corp. Both parties wish to reduce their respective tax bills. Seller A agrees to reduce the purchase price it's willing to receive for the Target Corp on condition that purchaser B will cause the Target Corp to transfer an asset to it at a discount equal to the agreed upon reduction in the purchase price for the Target Corp. Seller A pays less tax. Purchaser B conserves cash, and the Target Corporation pays less tax.
Wow.
Brilliant.
Yeah.
He's brilliant. Yeah. This is well done. Okay, in the present case, I really like that paragraph 70.
Yeah, 70 is that's a masterpiece.
Yeah, that's really, really nice.
That's one of the best that we've read so far. So
yeah, I will say.
I want to. Maybe even more, this paragraph is.
Yeah, I would say, yeah.
I
mean, it's impressive. It's very impressive, yeah. So he says, in the present case, a similar result occurs under a more sophisticated plan. This is how you know the guy knows what he was talking about. You can trust the judgment because he's like, oh, let me explain it to you in simple words. HB Acquisition agreed to cause Mohawk Canada, Target, to transfer Mohawk Lubricants for consideration worth less than the fair market value of the Mohawk Lubricants shares. As a result, HB Acquisition conserves cash. Following the amalgamation, HB Acquisition could no longer be compelled to buy back for $15.5 million the securities it issued to buy. To complete the transaction, by having obtained the full present value of the residual assets, transferred the shares it held in HB Acquisition in exchange for preferred shares in HMLT that had a similar impaired value. I am of the opinion that in the instant case, Mr. Kopstein's plan was designed to defer tax, while the plan described above is aimed at avoiding tax. Subsection 69.4 prevents both plans from working by providing that the target corporation must pay tax on the full value that has been appropriated for the benefit of the shareholder HB Acquisition. The appellant argues that the respondent did not properly identify the appropriator in its reply to the notice of appeal. The documentary evidence submitted to me in the Joint Book of Documents has enabled me to conclude that the appropriators are HB Acquisition and Husky, yes, the parties that directed Mohawk Canada to enter into the amalgamation for their benefit. The transactions that gave rise to the application of subsection 69.4 are the very same ones that give rise to the application of the 87.4 exception.
Good. And finally, subsection 56.2. The respondent invokes subsection 56.2 as an alternative basis for the reassessment. The provision reads as follows. 56.2. Indirect payments. A payment or transfer of property made pursuant to the direction of or with the concurrence of a taxpayer to some other person for the benefit of the taxpayer or as a benefit that the taxpayer desired to have conferred on the other person, other than assignment of any portion of a retirement pension pursuant to the Pension Act or a comparable provision of a provincial pension plan, whatever, shall be included in computing the taxpayer's income to the extent that it would be if the payment or transfer had been made to the taxpayer. Emphasis added. In Newman versus MNR, the Supreme Court of Canada reduced the application of subsection 56.2 to its essential characteristics as follows. 1. The payment, transfer of property, must be to a person other than the reassessed taxpayer. 2. The allocation must be at the direction or with the concurrence of the reassessed taxpayer. 3. The payment, transfer of property, must be for the benefit of the reassessed taxpayer or for the benefit of another person whom the reassessed taxpayer wished to benefit. And 4. The payment, transfer of property, would have been included in the reassessed taxpayer's income if it had been received by him or her. Mr. Weavers testified that someone in the head office suggested that subsection 56.2 should be thrown into the mix in the event that the court concluded that the amalgamation qualified for rollover treatment under subsection 87.4 and that subsection 69.4 did not apply. The 4 conditions listed above require that the person other than the transferor direct that the transfer take place, thus making that person taxable, provided that the person would otherwise be taxable if the transfer was made directly to him or her. Subsection 56.2 could have applied to HB Acquisition, the party that benefited from the amalgamation, in much the same way that subsection 51 could have been invoked. The amalgamation was not carried out for the benefit of Mohawk Canada, as it gave up shares that had greater value than the Looms Amalco shares it received. Finally, subsection 56.2 cannot be applied to the owner of the transfer property, Mohawk Canada, because it would not have been subject to tax on property that it already owned, and thus the requirement of the 4th condition is not met.
That's right.
For these reasons, subsection 56.2 does not apply to the transaction herein. For all of these reasons, the appellant's appeal is dismissed with cost to the respondent, signed at Ottawa, Canada, 24th day of February 2009. Justice Robert James Hogan. Done.
Applause, please, for Robert Hogan. Yeah, I mean, look, this is it's a messy, complex case with a lot of moving parts and a lot of moving people, a lot of testimony, and a lot of stuff is going on. And I think that it's really easy to get lost in the details in this one. And I kept sort of waiting, like, okay, I know he's going to give us some analysis. And then he did. And then he really broke it down in that paragraph 70. I
think it was a long read like to get to the substance.
Yes, it's almost like the background facts are so lengthy that I'm not sure you benefit from knowing them unless you are trying to unpack each detail of each of those transactions.
Well, I think as a reader, I mean, sometimes we're gonna do it, like actually draw all the graphs, etc. But I'm like, okay, what was going on?
Yeah.
In that case, and what will I remember in a week about this case?
Yeah.
And it's the idea that if you're trying to get some assets out of the corp in order for the buyer to pay less, but in the end of the day, the buyer has the assets that you spinned off, you have a problem somewhere if you want a tax-free treatment. So it's really, if you do a spin-off, you have to do a real spin-off. You cannot go back to the purchaser.
That's right.
Yeah,
I think that's right.
And I think it makes, from a policy perspective, I think it makes a lot of sense that you don't want that kind of, you spin off, but not really. Mm-hmm. And you're just trying to, pay less tax on the gain on disposition, or to get the tax-free treatment.
Yeah.
Like we did here. Makes sense. I would be surprised if the taxpayer was right from the outset. Like when we read the case, it was like, I'm not sure what is the provision that applies, but there must be something.
Yeah.
And I'm not actually sure. I mean, it's both 87.4 and 69.2.
Yeah, in the end. Yeah. Well, the 69.4 identifies the thing that you did that then busts your 87.4.
So it's a bit like there's like two provisions that you would apply for that scenario. I really enjoyed the simplification by Justice Hogan. Like, hey, this is this provision. This is the situation where it's intended to apply. And this is a very complex example of this very simple thing.
Exactly.
It made so much sense just to have this simplification.
Yeah, I appreciate it because, I mean, we do deal in a lot of complexity, and to be able to say, okay, look, here's the basic problem, and then in a few sentences, you all of a sudden the light bulb comes on and all of this complex facts pattern, all of a sudden you're like, oh, yeah, I get what's going on. I get what's going on. And, that's just, that's good writing. That's obviously new as stuff, and I think probably took some pleasure in writing a good agreement. I mean, he doesn't have to do that, right? He doesn't have to explain it to us, but he does explain it to us, and I appreciate it.
I think it's interesting compared to other judgments or maybe other justices, is that I feel the judgment is not written just for the parties.
Right.
It is, there's a part for the parties.
Yeah.
I think there's a part for us.
Yeah.
We're reading it, and it's like, I don't know what is going on. I don't really care about this all the facts.
Yeah.
They're there. And in the analysis, it's like, I'm going to teach you
Yeah.
why it matters.
Yeah.
And I'm going to teach you something about the law.
Yeah. I'm going to give you some principles to work with here.
There's a bunch of justice, I'm pretty sure, that would not have done this.
No, that's probably right.
Especially, I mean, it's not a case that I've heard really, never read it before. Like, it's not that important in a sense.
No, right. Absolutely. Right.
But, it's like he knew that 15 years later that we're going to read it and learn something.
Yeah, we learned something
and
from it.
That's really good. Appreciate that.
We do like it. We do like it.
Thank you, Justice Hogan.
Good. So thanks to everybody that joined us. We had some movement there on YouTube and in Instagram, and we appreciate every viewer for every minute that they come and spend with us. Thank you.
Thank you, everyone, and see you again maybe next week.
Next week, I think.
We'll see, yeah. And thank you. And this was the Tax Files.
Okay. Good?
I think it's good.
No, we're still on YouTube.
Yeah, but I think it's just the buffering.
Oh, residual, yeah. Okay. No, it's still going. You're still live. I don't know how to explain it, but you are still live. Yeah, you have to say